Could we come to order? And first, my apologies on behalf of my apologies to the if we could get these two members to stop from yelling across the table, we'd be all right. My apologies on behalf of the committee to the witnesses. We had an informal meeting with the Finnish Finance Committee, and we went a little longer than we thought we would. So my apologies for having you stand around outside for a while. So in this session, pursuant to Standing Order 108.2, the committee will do a study of tax planning using private corporations' contributions, and this will be contributions to the Department of Finance consultations. And just to inform you, because the consultations end on October 2nd, it was decided that we would do hearings with 24 witnesses, I believe it is, and the minister. And the minutes and the submissions and everything you present us today will be forwarded to the Department of Finance and the minister without recommendations from this committee, but it's said to add to the process of consultations. I do thank those who were able to submit briefs. They are on members' iPads. And I thank each and every one of you for the fairly quick, super quick notice that you got to prepare and come before the committee. So to start, if we could hold the opening statements to about 5 minutes, it would be helpful. Starting with the Canadian Federation of Agriculture, Mr. Bunnett, who's President, and Mr. Ross, Director of Business Risk Management and Farm Policy. Ron, floor is yours.
Okay, thank you, Mr. Chair and committee members, for the opportunity to share our perspectives on the proposed changes on tax planning using private corporations. Through its member organization, the Canadian Federation of Agriculture represents nearly 200,000 farm families from coast to coast. And in the 8 years that I have sat as CFA President, it's hard to recall an issue that has evoked so much concern from farmers across Canada. Farmers have concerns with the breadth of the proposals, the limited consultation occurring during harvest, and the immediacy of their coming into force. CFA maintains significant concerns with the lack of time to provide feedback on such broad reforms to tax policy. We would be pleased to work with government on improving tax fairness, but such objectives can only be truly achieved through a comprehensive review of Canada's Income Tax Act that engages the broader business community. As such, we have signed on to the Coalition for Small Business Tax Fairness to advocate for a more deliberate and comprehensive process that proactively engages with Canada's small business community. Today, we'll focus our comments on the farm sector impacts, but we believe a broader review is still required to address the concerns of the entire small business community. We were pleased to see Minister Morneau and Macaulay publicly state that Canada's family farms and legitimate farm practices are not the focus of these changes. Despite these assurances, farmers could be hit with unintended consequences given the tight timeline before final legislation is to be introduced. Canadian agriculture is evolving at a rapid pace. Approximately 25% of family farms are now incorporated, while farms continue to increase in size and complexity, and the average age of farmers is now over 55. Succession planning can take years, and many plans will become unusable as a result of these changes, leaving farmers having spent tens of thousands of dollars with little to show for it. The current proposals require significant amendments if legitimate practices are to remain unaffected. I will now pass it over to our Policy Director, Scott Ross, to lay out a few of our specific concerns.
Thank you, Ron. Due to the timelines and the stress that our assessment is not yet complete, we continue to hear of new issues and have come together with other farm groups to commission a more detailed analysis of the farm-specific impacts, but this won't be available until October 2nd. Preliminary results indicate additional tax liabilities well in excess of $1 million on a typical family farm over a 20-year period. On income sprinkling, we note a few key concerns. Farm families live where they work, and contributions to the farm come about in numerous direct and indirect ways, to which a one-size-fits-all reasonableness test will not do justice. Family farm transfers can take place over decades, with farm children often holding interests in the farm while pursuing an education or working off-farm to build skills and diversify revenue. The strict reasonableness test for those between the ages of 18 and 24 creates particular challenges on this front. Family farms also have access to the farm rollover provisions, which allow for transactions below fair market value. Vagueness in the current proposals creates uncertainty for any assets currently transferred in this manner. On passive investments, question remains as to how rented farmland and agri-invest funds will be treated. Broader concerns persist about farmers' plans for retirement and future investment. The latter would directly undermine industry's capacity to meet the ambitious growth targets for agri-food exports set in Budget 2017. Finally, changes to capital gains treatment create undue complications for intergenerational farm transfers. Changes to prevent converting income to capital gains would reinforce inequities that CFA has long noted, which discourage selling family farms to family members. Limitations on access to the capital gains threaten long-term succession plans put in place under the current tax regime, creating additional complexity and costs. The 2018 special election is also fraught, creating unmanageable tax liabilities through alternative minimum tax treatment and a series of potential tax traps. Each of these concerns speaks to the potential for significant unintended consequences. I'll now pass it back to Ron to lay out CFA's views on the path forward.
In our meetings with Finance, the Prime Minister's Office and the Agricultural Minister, it was noted that family farms are not a target of these changes, but we are struck by the magnitude of the changes required and the time available to make those corrections. We have two recommendations to address the concerns of the farm sector. First, that Finance Canada commit to a clear process with farm stakeholders to address these concerns, focusing on, first, exempting legitimate farm income from the new income sprinkling rules because they cannot be applied fairly in the context of a family farm, and two, exempting qualified farm property because the new rules are detrimental to farm transfers and are inconsistent with current farm transfer tax rules. Finance Canada must extend this arrangement over 2018 to ensure that any unintended or unforeseen consequences following the new legislation can be immediately addressed. Second, the implementation of these proposals must be delayed until no earlier than 2019, and any transitional rules must be further refined to avoid unintended consequences. I would like to thank you and look forward to your questions.
Thank you very much, Ron, and we look forward to that study when it's done. That I know a number of farm groups are doing. Canadians for Tax Fairness, Mr. Hallett, Executive Director. Dennis, floor is yours.
Yes, thank you for the opportunity to speak to this issue. One of the challenges with tax policy is that the wealthy have the most to lose or gain, so they are the most vocal. When governments only listen to them, then we end up with a whole lot of tax cuts or a tax policy that exacerbates a growing income inequality. When governments offer tax cuts or close tax loopholes, it's not likely to make much difference in what middle and lower income Canadians pay in taxes. Ordinary Canadians don't speak up as a result, and we've seen the progressivity of our taxes eroded by more and more tax cuts and loopholes that primarily benefit the rich. A recent Canadian Centre for Policy Alternatives study found that the richest 10%, on average, get a discount of more than $20,000 a year on their taxes from tax loopholes, an increase of $6,000 since 1992. And middle and lower income Canadians, however, they are affected when governments don't have enough revenue to properly fund programs such as childcare or public transit or public services. For example, the Liberal government did introduce daycare funding in last year's budget, in 2017 budget, but it was $7.5 billion over 11 years, which the IMF has said is totally inadequate. They are saying $8 billion a year is what's needed, and that investment would be recovered in increased taxes and a higher labour force participation rate. Canadians for Tax Fairness has been calling on the government to conduct a public consultation on tax expenditures. what we call tax loopholes, and close those that are unfair or ineffective. And we welcome the proposed measures to curb the use of private corporations to reduce taxes as a step towards tax fairness, but urge the government to follow up with closing other unfair and ineffective tax loopholes, such as the stock option deduction and the capital gains exemption and the business entertainment tax deduction, just to name a few. We have exposed wealthy individuals using tax offshore accounts in tax havens to evade taxes and called for government action to tackle tax havens. And we're pleased that some steps have been taken in that regard. But we have never accused those who use private corporations to reduce their taxes of being tax cheats. What they do is legal. But that's the problem. The legal tax avoidance is just as big a problem in terms of loss of government revenue as the illegal tax evasion. And it is the government's responsibility to reform laws that do not serve the public good or that are allowing a few wealthy individuals to pay less than their fair share of taxes. At the root of this issue is inequality. A tax system has become less progressive over the past several decades and has been a major contributor to growing inequality. The International Monetary Fund and the OECD has determined that the current level of inequality in Canada is negatively impacting our economy. It is slowing down our economic growth. And data shows that inequality also undermines everyone's well-being, including health outcomes, population health outcomes, even for the rich. Stagnant incomes of middle and lower income Canadians reduces consumer demand for goods and services that business depends on. In fact, the Canadian Federation of Independent Business survey of its members in 2015 found that the main factor limiting the ability of small businesses to increase sales or production was insufficient domestic demand. Their biggest problem is not the tax rate, but the lack of purchasing power of Canadians. They would benefit from government policies to boost aggregate demand, such as raising minimum wages, investing in daycare, and investment in other social and physical infrastructure. Our tax system is also one of the best tools that can be used to help reduce inequality by raising revenue that will enable governments to invest in programs that will help reduce inequality and also curb unfair and ineffective tax expenditures that exacerbate income inequality. The research clearly shows that the wealthy are far more likely than middle or lower income Canadians to own a private corporation, and the wealthy are far more likely to take advantage of these tax loopholes. Less than 10% of those with incomes under $51,000 had a significant interest in a private company. And for the top 1%ers, about 50% own significant interest in a private company. And for the top 0.01%, the number rises dramatically to almost 80%. So this isn't just a small business issue. Two-thirds of Canadian small businesses owners are earning less than $73,000. And for them, this tax loophole really doesn't provide much benefit at all. It's not much help for startup businesses because they don't make much money in the initial years. And small businesses have other options to save for retirement. The RRSP and the tax-free savings account are already benefiting from very generous government subsidies.
If I could, we're a fair bit over if you could sum up fairly quickly.
My point is that this is an important step forward in tax fairness and that it should not harm job creation or the economy as a whole.
Thank you very much, Dennis. Turning to the Coalition for Small Business Tax Fairness, Mr. Kelly, President and CEO of the Canadian Federation of Independent Business. I believe we just seen you the other day. And Mr. Juan for National Tax Office Leader, BDO Canada. Floor is yours.
Thanks very much. And John and I will share the presentation. I did wear a different suit this week, Chair, just to try to throw you off, but it didn't work. I am here today not in the capacity as head of the Canadian Federation of Independent Business, but as the head of, or not the head, but as a member of the Coalition for Small Business Tax Fairness. This coalition started just about a month ago, less than a month ago. Started out with 35 business associations coming together to raise their concerns over these issues, and now has grown to over 70 business associations across the country, representing hundreds of thousands of Canadian employers and millions of Canadian employees. The coalition members are listed in the deck that I presented to you, but it includes members from construction, agriculture, professional services, retail, restaurants. All of those groups came together to try to express concerns to government about these proposed changes. By way of background, I'm very pleased to hear that both government, those that are in favor of this legislation and those that are opposed, have all agreed that the vast majority of small firms actually have fairly modest levels of income. 2/3 have under $73,000 in income, and I'm very pleased we're not getting into debate over that, including those that are earning well below $150,000 per year, a number that was put out by the minister. Many, if not most, of these businesses will also find that their tax burden will increase. And that's something I think we need to make sure government knows, is that for the majority of business owners, their overall aggregate level of taxation that they will pay as a result of these changes will be higher in the future, obviously meaning less money for the other things that we may view as important. Also, through these changes, there are many examples that the Coalition is illustrating where Canadian business owners will pay higher rates of taxation than other taxpayers at similar levels of income. So this isn't just about making small business owners pay the same. This is, in many cases, finding business owners will pay. We find that business owners will pay more. Of that, there seems to be no question. All of the reviews by tax professionals have suggested that there are many examples where business owners will pay more than other taxpayers at similar levels of income. On income sprinkling, this has the potential of affecting all taxpayers at almost all levels of income. Really, at about the $50,000 income level, business owners will start to be affected by these changes. We are also deeply concerned about the lack of clarity as to the reasonableness test, the enhanced reasonableness test that will be used by the Canada Revenue Agency. With respect to passive income rules, many businesses do have requirements to retain earnings in the corporation, or policies that limit the amount that they can be distributed to their shareholders. Many businesses incur losses in their startup years that the shareholder just can't use to offset against personal income. And we also want to note that successful businesses, particularly in the high-tech sector, use these retained profits in the corporations to invest in other startup businesses. So that source of financing for other businesses, we worry, will start to dry up. And while some have suggested that an enhanced use of RSPs or TFSAs may be a solution for business owners, there are practical limitations of this. And your policies will encourage business owners to take more money out of their businesses, leaving less money in their business to protect them against economic downturns, problems in the business, or to invest in future business opportunities. I'm going to turn things over to John to take it from here.
Okay, thank you. Thank you very much for the opportunity to speak. Dan's asked me to speak to two slides here. The first slide, comparing the tax on passive income between the current and the proposed rules. I just want to make a couple of points with respect to that. There's no question the proposals would substantially increase the tax on passive income earned inside a private corporation, where the source of the funds benefited from a tax deferral that the corporation offers. Basically, what the proposals will be doing is try to claw back the advantages of that deferral. The tax rates, I think, on this slide are not really in dispute. A lot of tax professionals have gone through that. There are substantial...
A second, we will soon start to run out of time, but people do have the slide that is on page 8. People have been given a copy. Go ahead.
Thank you, Mr. Chair. Yeah, so the tax rates on this slide I don't think are in dispute. They just show the substantial increase in the tax costs for these types of passive income. I think the question here is the policy question that really needs to be examined is whether a deferral is appropriate tax policy for Canadian private businesses. We believe that there are good reasons that this is appropriate tax policy. Dan's already alluded to some. I want to add 2 points to that. I think a source of savings inside a corporation ensures a pool of capital available to invest in the business. And those types of substantial investments can only happen every few years, particularly for a smaller business. I think it's very important that they're able to save these funds to have access to that. Secondly, these types of savings can help businesses through years where income fluctuates or through economic downturns. We have a lot of clients in our firm, for example, in Alberta during the recent economic downturns, who use their savings in private corporations to maintain employment levels in the Alberta market, where larger corporations had a lot more layoffs than the private business sector. Just moving on to the next slide, which is slide number 9, just a couple of comments with respect to the impact of the changes on intergenerational transfers. And I just want to make a couple of points to help you understand that the tax cost of intergenerational transfers will increase and increase substantially under these proposals. And they're going to increase for a number of reasons. You see on the slide there, it talks about the tax costs actually increasing by as much as 70%. Let me just explain that for a minute. Many intergenerational transfers are structured so that parents pay capital gains tax on the sale of shares to their children, even foregoing the capital gains exemption, the ability to claim that exemption, and allowing the children to use the future profits of that business to pay back the parent. The changes are effectively going to change the tax cost on that type of planning from a capital gains rate of 27% approximately to the tax rate that applies to dividends, 45%. Do the math, it's about a 70% increase. By selling to an arm's length party, the business owner would only have to pay tax at a capital gain rate of 27%. And if they add a capital gains exemption into there, you can actually even lower that rate even further. So there's a bias now being created towards an arm's length sale of the family business over an intergenerational transfer. We have other examples. In the interest of time, I'm going to stop right there, but we do have other examples where even the answer is even worse if the new rules for splitting income will apply.
Okay. Very quickly, Dan.
Yep. Just to conclude, we're sending a letter to all MPs directed to the Minister of Finance tomorrow on behalf of the Coalition. The purpose of the letter is to challenge the assumptions that are being used, the justification that is being used for these particular changes. It is highlighting that businesses will pay and showing the evidence from almost all private sector tax professionals that business owners will pay more as a result of these changes. They'll pay, in many cases, more than other personal taxpayers, and that this will disproportionately affect women. It will also, finally, it will ensure that the changes are focused on middle-income small business taxpayers, not just those at the high end. Thank you.
Okay, thank you both. Turning to Unifor, President Jerry Dias, and National Representative Research Department, Ms. Thiessen.
Good morning. My name is Jerry Dias. I am the National President of Unifor, Canada's largest union in the private sector. We represent over 315,000 working people from coast to coast to coast. Our members work in every sector of the economy and are represented at every income level. Our members pay their taxes and contribute in multiple ways to building a society we want to live in every single day. On behalf of our members, their families and their communities, I am pleased to provide our views on the fair taxation of income of CCPC owners in Canada. Unifor advocates for and supports a progressive tax structure that ensures our governments at all levels have the revenue necessary to provide high-quality, efficient, and effective public services. That tax structure also needs to acknowledge the income and wealth inequality present in our society today and ask those who earn more to pay more. Taxes pay for the basic services that we rely on every day, from health care to infrastructure to addressing some of the most pressing needs of today, including poverty elimination, reconciliation, and leadership on the environment. The issue we're here discussing today is an inequity to our tax system that allows some people to opt out of paying their fair share of the revenue governments need to pay for those services. The Government of Canada is proposing to close some tax loopholes that allow incorporated small business owners to avoid paying the same amount of tax on their income as an earner who works for employment income and makes the same amount of money. 60% of the top 0.1% of income earners in Canada own shares in a CCPC. Only 5% of middle-income families do the same. That means that 60% of the highest income earners in Canada have the ability to opt out of our progressive tax system through these loopholes, while the rest of us have been paying our fair share all along. Most small business owners do not benefit from these loopholes either. A business owner has to have a very high income in a particular family structure in order to accrue significant benefit from the loopholes that are being discussed. But 2/3 of small business owners make less than $73,000 a year. Most small business owners do not earn enough money to exploit the loopholes. Unifor supports the government's initiative to increase fairness in the income tax system by closing unfair tax loopholes. Loopholes that are currently available to high-income earners who have incorporated a small business but are not available to people who work for a salary or wages, both high and low earning. The result of exploiting these loopholes mean that some earners have higher disposable income or a larger investment portfolio than others simply because of the structure of their business. The loopholes under scrutiny today have meant two earners with similar incomes in a similar family structure, one with a CCPC and one without, will pay two very different effective tax rates. Those differing effective tax rates results in two very different levels of his disposable income today and two very different levels of savings in the future. We know that the tax benefits of these loopholes accrue to the highest earning CCPC owners. Furthermore, research from virtually every economist and policy expert who has weighed in on the subject has found that benefits of the tax loopholes only accrue once a CCPC owner's income has surpassed a certain level. Income splitting, for example, does not provide a significant benefit to anyone making less than $90,000. Business associations and other advocacy groups have tried to paint the proposed changes as a tax grab on the middle class. This is not the case. The tax changes will lead to more high-income earners paying the same tax rate of their salary and wage-earning peers. Where this issue does affect the middle class is ensuring income earners in the same income decile before tax are in the same income bracket after tax. Business associations and other advocacy groups have tried to paint the proposed changes as a drag on investment, innovation, and entrepreneurship. The reality is these tax loopholes have very little to do with innovation or business investment. Governments can and should develop systems that support innovation and business investment, but the current system is one that incentivizes neither. This proposal is about protecting the integrity of Canada's progressive tax system. Canadians believe in paying their fair share of taxes. While there is more to be done, this is certainly a step in the right direction. Thank you.
Thank you very much, Jerry. Mr. Milligan, Professor of Economics, University of BC. The floor is yours.
Thank you very much, Chair, and thank you, members, for convening the meeting. I'd like to make two quick points this morning. First one is about the goals of the reform, and the second one is about the implementation of the reform. As I see it, the main goal of the reform is to push towards neutrality of the tax system. A neutral tax system is one in which business decisions are made based on business merits and not pushed one way or the other by the tax system. That's a free market principle, and I think it's a good one. Now, the current tax system fails neutrality in a number of ways. Let me give an example of a way that our system fails neutrality right now. Imagine someone, she has some skills, a hammer, and a truck, and she wants to start a business for herself. She talks to her friend who's an accountant who says, you know, it doesn't make sense for what you're doing to incorporate. Just for business reasons, you don't need to do that right now at the kind of income level you have. Well, the problem is that she has to compete out there with people who are incorporated, who get a whole bunch of tax benefits that she, as an unincorporated person, does not get. What this does is creates a barrier to starting up a business. There are a lot of businesses out there, a lot of people with a whole bunch of entrepreneurial spirit who are not incorporated. And they're equally hardworking and equally care about their families and equally help out the economy. We want to make sure that the balance between incorporated and non-incorporated business is there. That's what I mean by neutrality. Okay, the second point is about the implementation of these reforms. Now, many tax practitioners have raised a number of concerns about things like succession planning, things like intercorporate holdings, and also things like the exact transition rules for the passive income measures. I think that there are, in these complaints that we've heard, these suggestions that we've heard, there's a lot of interesting and useful suggestions. What I hope we see is that the Finance Minister and the Ministry of Finance, after October 2nd, are able to respond seriously and thoughtfully to these concerns that have been raised. I do think these things should be taken seriously. However, I don't think we should stand frozen in inaction because of fear of some transition costs. Tax changes always require transitions. They always require some disruption. I'm pretty sure that in 2019, members from parties around the room here are going to have some tax proposals they want to bring forward. And every single one of those tax proposals will involve some transition and some changes. What I think is the right way forward is to balance off the costs of those transitions and the complexity that might arise with the benefits that you get from pushing towards a goal that we think is important. That's the way I think we can build a better tax system for Canada.
Thank you very much, Mr. Milligan. Mr. Lanthier, retired partner of Ernst & Young and former chair of the Canadian Tax Federation. Welcome, and as an individual. Go ahead.
Thank you, Mr. Chair. I'd like to thank you and the other committee members for inviting me to appear today to address this important issue. I'll restrict my opening statement to certain aspects of the passive income proposal. The proposal is contentious and would result in significant harm to our Canadian economy and therefore to the middle class that depends on that economy. A Canadian-controlled private corporation, or CCPC, is, as you know, taxed at preferential rates on business income. The government is concerned that a CCPC that acquires portfolio investments therefore has a deferral advantage that is not available to individuals. The government's concern has merit. Investment income of private corporations increased from $9 billion in 2002 to $27 billion in 2015. The government's proposal would tax the investment income of a CCPC at a non-refundable rate of 50%, equal to the assumed highest personal tax rate for individuals, the so-called one-percenters. Then there would be a second tax when the corporation pays dividends to its owner. The result would be a combined tax on investment income of more than 70% for business owners at the highest rate bracket. The impact on middle-class business owners would be even worse. While middle-class owners are not the real target, by using a non-refundable corporate rate of 50%, the proposal would severely overtax every business owner in this country who is in a rate bracket below the top rate. For example, a middle-class owner who is in the 30% bracket would suffer a combined rate of 59%. Not 30%, 59%. That's a 75% increase over existing law. Canada already imposes an immediate tax of 50% on the type of income we're talking about here. That is more than enough. There are about 200 countries in the world. There is only one country in the world that has a corporate tax rate above 50%. Still, the amount of investment income of private corporations is increasing, so why is that? Outside of the professional sector, there's no reason to believe that businesses are incorporating for tax advantages. A business incorporates for a number of non-tax reasons, and none of these have changed in the last 50 years. Professional income is quite different. Many high-rate doctors, lawyers, and accountants, including many partners of large national legal and accounting firms, are incorporating solely for tax benefits. This is certainly the major cause of the recent increase in the amount of investment income earned by private corporations. I therefore suggest a different approach: the introduction of a special refundable tax for professional income of a CCPC for most medical doctors, lawyers, and accountants. This tax would be similar to the tax that was enacted in 1979 and repealed in 1984 for mechanical reasons, not tax policy reasons. The tax would not apply to any other industry sectors, and so would address the government's concern but avoid most of the economic damage that applies under the current proposal. It would be simple and understandable, and the revenue from the tax could be easily and accurately tracked. All additional tax revenue from incorporated medical doctors should be earmarked to healthcare funding and the balance to debt reduction. Mr. Chair, I'm a retired accountant. I have no clients. I hold no interest in private corporations or in any trust. I have no dog in this fight. I simply want to see tax changes that address tax policy concerns, but that do that in a sensible and thoughtful manner, and that strike an appropriate balance between tax revenue for the government on the one hand and the inevitable damage to our economy that any additional taxes cause. As part of this process, we do also need a comprehensive review and reform of the taxation of private corporations. Thank you, Mr. Chair.
Thank you very much, and thank all of the presenters. There's no question. We have the full width of the debate, and I thank everyone for their directness. We'll go to 5-minute rounds so that we can get more people on questions, starting with Mr. Fergus.
Merci beaucoup à tous les...
Thank you very much to all our witnesses who are with us today. Thank you for your presentations. I appreciated them. One of the privileges of being a member of Parliament is that you learn. You learn things that you were never interested in beforehand. I'm the son of immigrants. When my father arrived here in Canada, he worked. My mom stayed home. And my father always had a salary. I, too, for almost all my career, was an employee. I've been an employee with a salary that I earned. But it wasn't so complicated for me. But since this summer, I've learned a great deal about the issues of private corporations controlled by Canadians. So,
all of you, and I'd appreciate if you could truly keep your comments to 15 seconds in terms of an answer. 15, it's a pretty direct question. Does the current tax system offer tax advantages to Canadian-controlled private corporations that are not available to salaried workers, salaried men and women like me? Mr. Lantier.
Mr. Chair, I thank the member for his question. Salaried employees are absolutely taxed differently than owners of small business. I think the only policy issue here is if individuals incorporate solely or primarily for tax purposes.
Got that. I just want to know what the current system is actually. I'm just trying to get my head around it. Mr. Milligan.
Yeah, I think it's a good question. I think there are clear advantages for those who incorporate. I think the right comparison is not necessarily to think about a regular salaried worker versus a small business person, but again, within the business sector, those who are incorporated versus those who aren't. Within the medical sector, there are 40% of doctors who are not incorporated, and thinking of them who train just as hard as everyone else and compare them to those who are incorporated.
Mr. Diaz or Ms. Tyson?
Yes.
Okay.
Bottom line is, we have a structure in place where doctors, based on the tax loopholes, pay less than registered nurses.
I'm not going there. I just want to get an understanding of the Mr. Wong for Mr. Kelly, or Mr. Kelly, one of the two. Go.
Yep, there we go. Yeah, there are some tax advantages with respect to Canadian-controlled private corporations. I think the key here, though, is we're in favor of a comprehensive tax reform to determine what is the right tax policy to support Canadian businesses, to be fair,
I got that.
and also to get tax simplification.
I got that. Sorry, it was a quicker question.
Mr. Fergus. Go ahead,
I'm
Mr.
sorry,
Hallett.
Mr. Chair. I'm just concerned about the time that I have.
I
and I
know,
want to make
but the
sure.
witness, you asked all to answer, and they'll answer. Mr. Hallett.
Yes, there are big advantages, even going beyond what already exists for small businesses. Canadian taxpayers are already subsidizing the lower small business tax rate by $3.6 billion. But even above that, there are additional benefits, probably about $1 billion that go just to the private corporations.
Mr. Ross or Mr. Burnett?
Yeah, I think the question should be about the balance of what a salaried employee gets and what a business owner gets. If you're working for a salary, you have benefits, you have a pension plan, you have an employer that takes care of all the risk. If you're a small business owner, you have a number of risks that you have to deal. Even more importantly, as a farmer, you've got weather risks that other groups don't have to contend with. And you have to make sure that you have the investment income and the ability to create those jobs. So I think it's very difficult to compare a salaried worker to a small business person because there's a different sort of a scenario where the salaried worker, and before I started farming, I worked for a large corporation and everything was covered and I didn't lose any sleep at night. But working as a farmer, you're losing sleep, you're worried about employees, you have a number of things that you have to manage, and some of these tax policies give us tools that we can use.
A very, very quick 30-second question at the most and 30-second answer.
Well, first of all, thank you very much for answering that question. So I think generally there's a consensus that there is a tax advantage which is offered to either it's incorporated versus non-incorporated persons. So I do appreciate that, and I also appreciate the particular case of farmers who are not just concerned about that, but also all the other factors which are going into be a successful farmer, which we all need. I don't have enough time to go on this, but thank you all for answering that question.
Mr. Poilievre.
Well, the answer is there is no advantage of incorporation in a tax sense because, of course, all income earned within a corporation is taxed at exactly the same rate as in the hands of a salaried employee, just at a different time. Small businesses pay 15% up front, and then they pay the balance of their tax owing on distribution. So no, there's not an advantage. There is a different circumstance in that salaried employees don't need to keep capital in a particular enterprise because their enterprise is their employer, which is separate than their own holdings. So my question is for Dr. Milligan, an economist for whom I have great respect. I do want to politely challenge one of your assertions. You've said that we need a neutral tax system. I think most people agree that we need more neutrality. And these changes are being sold as though they are, turning our tax system more into Switzerland, neutral. But there are examples of the contrary. Passive income, the passive income measure will mean that a business would pay higher taxes when investing in another business's operations than it pays when investing in its own. A bias further compounded by the fact that publicly traded companies will not face, nor will their shareholders, face these higher tax rates on passive income held within the corporation. And finally, amendments to Section 84.1 and the creation of the new Section 246.1 would make a family farm or a family business pay higher taxes to sell its enterprise to its children rather than to a stranger. So these are examples of where these proposals would seem to render the tax system less neutral rather than more. How would you respond to those matters?
I thank the member for the question. A couple of things. First, I think it's great that we can agree on the principle of neutrality as being an important goal to which we strive. I think that is the right goal for our tax system, to make sure that we have a tax system that encourages growth and also is fair to all Canadians. So I think it is a good goal. It's good to identify places where the system is not currently neutral, and we could have a very long discussion about all the ways that's true. And the member has identified some important issues that may be challenges with the current proposal, being the intercorporate holdings, being the succession planning, and other elements which may lead to situations in which people in seemingly similar circumstances face different tax situations. So these are some of the concerns that I hope are addressed after October 2nd when we hear the response from the Minister of Finance. And I encourage the member to continue those questions when we see the response from Finance. The second point I'd like to make is about the small business deduction. And the reason I raised that is because that's kind of the core of the non-neutrality that we've introduced here, that we have a different tax rate for some kind of businesses than other businesses. So one way we could go to get rid of that neutrality would be to remove the small business deduction entirely. Now, that might be something that a lot of people would have a challenge with. Back in 1971-72, when this was first introduced, that was the exact nature of the discussion. We're going to have a small business deduction because we like to encourage growth in small businesses, but the challenge we face is how to make sure that we focus those efforts on the small businesses to grow their business and grow the economy, and not use it as a place to accumulate savings away from taxation.
I thank the good gentleman for his comments on the small business deduction. My question, though, was related to the new biases and the new inconsistencies that are now created by this tax change. And I want to give the Coalition for Small Business a chance to comment on this, because again, the academic or esoteric arguments in favor of this proposal is that it's going to create more neutrality, but I've just given 3 precise examples where the system will in fact become less neutral and more biased, and where different taxpayers of the same income level will be taxed at greater disparities than they are right now. Can you comment on that, Mr. Kelly or Onefour?
Yeah, look, I think that's certainly the case. We are deeply worried that this is going to create it is mixing up the Canadian tax system for businesses, turning it on its head after about 40 years, with I appreciate that there is some consultation, but very limited consultation for the size and scope of the changes that are being proposed. I have to say, there are some, particularly in the academic community and many in government, who seem to feel that they can divine which businesses are going to be the ones that are going to be successful, or they're going to be the ones that are going to grow rapidly, and we should shower them with support. And I get and appreciate the intention and the goals that they have. Many in government have said that they want to support small business just in different ways, by picking those small businesses that are going to be successful and helping them grow the economy. It's just that there's zero track record of any government agency or academic set of criteria that will help governments or others do that. Right. And our view is that the only way that we can do that is by truly being neutral, ensuring that there are broad-based supports like the ones that currently exist, and of course the additional supports that were promised by the government to reduce the small business rate to 9%.
And you, sorry, Pierre, time's up. Mr. Bullrus.
Merci, Monsieur le Président. Merci à tous.
Thank you, Chairman. Thank you to all our witnesses today. Your information certainly has been enlightening. I'm sure you've done a great deal of research, but it is sometimes contradictory when we move from witness to witness. I would just like to point out, Chair, that during the last election campaign, the present Prime Minister made an unusual statement to the effect that he felt that some people were creating small and medium-sized businesses to avoid paying their fair share of income tax. He could speak from experience because I'm sure he's done the same himself. He founded 4 numbered companies himself. So it does poison the atmosphere, and I think people reflect that because that's not their reality. The Liberals also promised to reduce tax on small and medium-sized businesses from 11% to 9%. They didn't do it. There was never any mention made during the election campaign about eliminating small business. But they spoke of loopholes that are to the benefit of the CEOs and allow them to reap $100 million a year. That's $100 million that we in government don't get to improve our infrastructure or our social programs. Mr. Diaz, you said you looked with favor upon and with concern on these inequities that exist between the salaried world and the loopholes that are enjoyed by CEOs and the multiplications that we have had with tax havens over the years, agreements with tax havens.
Papers, we following that whole stream. Look, I paid $53,000 in taxes last year. I don't quarrel about that at all. I'm not looking for a mechanism of which to reduce it. I enjoy these social programs here as well as every other Canadian. I want to make sure that we have enough money for infrastructure spending to create jobs. So, look, I believe in tax fairness, period.
Yeah. Merci, Monsieur Diaz.
Thank you, Mr. Diaz. In the Liberal 2015 election platform, they promised a long-awaited study dealing with $100 billion in tax matters that presently exist. I agree with the Coalition for Small Business with respect to the fact that the consultation was too short. It happened in the middle of the summer, and really didn't reflect reality when you look at a broad-based examination or review of the tax system. Do you not think that we should have a review of all tax measures, not just targeting certain economic measures? According to you, should we review all the rules, not just those that apply to small business, but also the rules that apply to the CEOs, to the multinational corporations, and all of those that benefit from tax havens?
Look, I get and respect that there are challenges. There are situations, including the situations affecting Canadian-controlled private corporations, where government may need to tighten some of the rules. We've never suggested that that is unfair. In fact, we didn't freak out when the government first talked about making some changes to that, nor did we reject out of hand the proposals when they first came out until we studied the potential impact of these changes on the broader business community. So we are 100% on board to working with government to ensure that all parts of the Income Tax Act are tightened to ensure that abuses are not allowed, including those aspects for Canadian-controlled private corporations. We just feel that this is the wrong way to do it. Tight consultation. I want to say one thing that I didn't get to say before. The letter that we're sending to you as parliamentarians tomorrow has detailed analysis by almost every accounting agency in the country to outline the concerns that we are expressing, to prove to you that these changes have a much broader impact than the government, I believe, thinks. And we're hoping that you'll pay close attention to that tomorrow when it's delivered.
Thank you very much, and we do look forward to that analysis. Ms. O'Connell.
Thank you, Mr. Chair. Thank you all for coming here. I could ask each and every one of you a question, but I have limited time. So I'm going to start with Mr. Bonnet or Mr. Ross. In terms of, first, let me thank you for the recommendations you put on the record, because that constructive recommendation is actually helpful, because this is a consultation period, and to make sure that there aren't unintended consequences. So thank you for those. But in terms of my colleague's earlier question, in terms of advantages or inequities, I want to ask the question, even amongst incorporated, let's say, farmers, I had my first job when I was 16, not in a small business, but the idea is a lot of young people work when they're 16, 17, and even amongst an incorporated small business, they would not, if it was a child of a parent who owned a farm, they would not be able to, those parents would not be able to sprinkle income in comparison to a farm maybe next door who have children that are 21 working in the business and have a very clear advantage of being able to sprinkle income, both legitimately working in the farm, but one has a sprinkling advantage that the other doesn't. Can you not acknowledge the fact that even within incorporated businesses and this kind of arbitrary age for sprinkling, that there's some inequality that should at least be reviewed and determined?
Well, I think what I would say, there's inconsistencies in the tax law, and I think in the presentation we talked about having a thorough review, and I think what's unfortunate is these proposals came down in July. There wasn't really time to analyze them, and that's why we agree with the Coalition for Small Businesses. If we're going to look at tax changes, you've really got to look at them thoroughly and do some analytical work. I mentioned we're having a study done of our own with the agricultural community. When you change one piece of tax code, quite often it'll end up bumping something down the road, and that's why you can't have a major tax policy change like this one take place over a very short period of time. It has to be almost a discussion paper, engaging with the small business community to just take a look at what some of the inconsistencies as opposed to the inequities exist. Scott, anything?
Well, I would just say that I think in regards to the example you use where a farm child is actually working on the farm, the sort of discrepancy you note between the two, I don't think in reality would actually take place. If someone is legitimately working on a farm, we would hope that even under the reasonableness test, and I think there's a number of elements of it that are currently quite vague, and we have very significant concerns with that. But under any sort of reasonableness test, we would hope that anyone legitimately working on a farm business was able to receive income for the work they're undertaking, regardless of whether they're a child of the farm family or a salaried employee.
Right, but as it exists right now, you can't sprinkle other than a specific age group. So legitimate reasonableness in terms of paying someone, but in terms of the sprinkling, there's an age limitation. Anyways, and I appreciate the comments in terms of an overall review, but I have to move on only because I have limited time, so thank you. Mr. Milligan, I can't really see you, but you know, I was interested in your comments that were reported in the media. In particular, Global News wrote about your comments in terms of the 73% number. And in the Conservatives' internal briefing that was released by Vice News, they talk about really focus on the 73%. Don't get hung up in the wealthy individuals, because that's not the message we want to attack the Liberals on. And so then it was interesting because you were asked, I'm assuming, in this media report, to comment on the 73% number. And what's reported is that you actually contradict and say it would, well, not contradict, but you clarify that there would be only a very specific case or cases that would actually equate to the 73%. But that's the messaging that certainly they want to counter, not focus on wealthy individuals, but the middle class. So can you maybe comment on that 73% number and the scenarios that really it matters in?
Sure, thank you for the question. I am an academic, so I'm going to start at the principles, but then I'll get into the specific example. So the principle here, again, is one of neutrality. We want a tax system that doesn't either favor nor disfavor saving inside the company. So what that means is we have to compare the taxation of savings inside a company with savings outside a company. Now, right now, because of that small business deduction, there is an advantage for saving inside the firm. What the proposals do is try to peel back that advantage by imposing an extra tax inside the firm. So that's what it does to balance the saving inside and outside the firm. Now, to do that, one has to impose this extra tax inside the firm, and this is where you get numbers like the one that you suggested for particular circumstances. So, for example, if you're a high-bracket Ontario taxpayer who already has $220,000 of other income, your extra tax you would pay, should you flow through your passive income, would be in the range that you suggested. But that's not something that's universal. I can pick another example, which would be someone who's making $50,000 as a small business person and immediately flows it through to their pocket because they're not saving big pots of money, they're trying to feed their family. That person faces a tax rate of about 30%, whether it's taken through dividends or through employment. Now, that's the kind of thing that I think matters to most small business people. Thinking about what is the taxation of a big portfolio of hundreds of thousands of dollars of assets, we have to get that right. We don't want to do that unfairly, but I don't think that's the main focus for most business people. Thank you.
Albas.
Thank you to all our witnesses. Certainly appreciate your input on this important measure. I'm going to start with Mr. Milligan, since we're both British Columbians. Proud to say that. I would just like to go back to your example of a woman with a truck and some tools getting out there. So, you know, I've been in that, not in construction, but I've been in the industry where you start off as a sole proprietor, and then you find a partner. In British Columbia, it's 6 months. You're considered common law. Let's say your common law has a condo. Suddenly, you are liable not just for what you do on the job, but also you can be sued if you drop a hammer on someone. And so suddenly your partner's assets now are coming to place. That's something that employees don't have to consider. Is that correct?
Most likely correct. I'm not an expert in law, but I don't expect that the liability would lie on an employee in such a situation.
Okay, so let's just say 5 years into it, she doesn't have a spouse or whatnot, but she does have a child. Okay, and so she's been putting aside money for her child's RRSP. Again, she drops a hammer at work. She gets personally sued, and so suddenly that RRSP can actually be taken in court through a court process. Is that the same kind of thing? Would that happen to a salaried employee?
Again, a salaried employee, I'm not an expert in the law, but it is my view that a salaried employee would face different legal obligations than an employer.
So again, she decides she's going to expand her business and then hires someone who then drops a hammer on someone. Because now she's vicariously liable for that. You know, you know, she can be actually, her house can be seized in a lawsuit. Is that the same thing that someone would be if they were just simply an employee?
Again, these are especially legal distinctions between those who are incorporated and those who aren't, those who are employees and those who aren't, and those are clear distinctions.
Well, I totally understand your argument on tax neutrality. We also have to acknowledge that the entrepreneur is working within a business reality. And again, the reason why more and more people are probably are incorporating may be just for the simple reason because they want to protect assets, because they want to look after their family. Now, I also wanted to talk to you a little bit about, and I got to thank you for your work on Twitter. I think it's wonderful that we have many economists that broadly, you know, put out their work on Twitter and make themselves available, so I appreciate you doing that. So you've talked about the difference between a salaried employee able to save for their retirement versus an incorporated company. First of all, most small business owners that I know say their business is their pension. Most small businesses, and I'm sure Mr. Kelly could say this, most businesses fail within the first 5 years, probably 95% plus. Is that would you say that's probably true, Mr. Milligan?
That number sounds reasonable. Again, I have to defer to Mr. Kelly.
Also, when someone signs up as a salaried employee, they usually agree to a certain salary, and so they can actually plan to set aside using the tax system. I know from a small business owner's perspective, there could be something goes wrong with equipment, and suddenly what money you thought would go towards saving for something like your retirement isn't there. In fact, again, after 10 years, I think that even then you still have close to 80% or so of small businesses fail. So do you see how difficult it is for someone who works every day in their small business that's trying to make it when they see you put out that, and not wrongly, but again, saying 50,000 here on this side when you're an employed salaried person versus when you're doing it in your business, how you cannot say it's the same and look at how much more that they have, because they are subject to so many more risks than a regular salaried employee. Do you see that there's a disconnect between the logic? Now, I agree from one perspective, the academic vision, I understand where you're saying it, but they are subject to completely different circumstances. Do you understand that?
There certainly are different circumstances.
Okay, thank you. I'd like to go over to Mr. Kelly just in regards to angel investment. I spoke to a person who's retired. He has a holding company. What he does is he spends the majority of his time finding small startup tech companies where then he can put his money, and he could put it into all sorts of different things. But he said, Dan, if I don't have complete certainty that, because he gives some mentoring, but that may not be considered an active investment. And so suddenly he's looking at, he could put money into Walmart, into other publicly traded companies, and receive a dividend that he knows 100% what his return is going to be. Do you think that this will have a negative effect on startup capital for entrepreneurs?
We do, and that's certainly one of the examples that we brought forward on behalf of the coalition to you. We believe that small businesses already start from a disadvantage when they're going to seek financing. It's one of the reasons why the small business corporate tax rate was created in the first place, was to allow small firms to be able to reinvest their own retained earnings back into their business. But the other benefit of this, of course, is that with respect to passive income rules, is that the income that is saved in a business can be used to invest in other businesses. And that can be an incredibly powerful and valuable thing. Governments have all sorts of supports, labor-sponsored venture capital funds, and other ways. The government's spending tons of time and money trying to find ways to support the business community. What businesses love is when other business owners invest in them, and the passive income rules can certainly help them do that.
Thank you all. Turning then to Mr. Graywell.
Mr. Chair, and thank you to the witnesses for coming today. Really appreciate it. I think to try to summarize a lot of your comments, there's a lot of passion and emotion on the proposed tax changes, and I really want to highlight the word proposed tax changes and the emphasis on the ongoing consultation. I think something that we're missing is that, this is how, in my humble opinion, democracy and policy works best, is that, something was proposed and now we're getting feedback from Canadians across this country on how we can change it. Ron and Scott, thank you so much for your comments on, really making sure that there's no unintended consequences and that there's appropriate transitional rules, because, we don't want to put any businesses in a position where, these things happen so quickly. And I do want to highlight the fact that they are going forward, the tax changes, and not retroactive. But you don't want any unintended consequences, because people do work really hard, especially on the family farm. Mr. Milligan, I really appreciated your comment that, it should be neutral in terms of your decision making. So, why should somebody benefit from a lower tax percentage and they only incorporate for the sole benefit of having that lower tax threshold? Can you comment on that and why that's actually not fair for all Canadians? And I give you an example. I used to be a corporate lawyer on Bay Street for a big firm, and the partners were able to take advantage of corporation, whereas even a 7th, 8th, 9th, 10th year associate was still a salaried employee.
Thank you for the question. I would push back against the notion that we know that a certain number of people are incorporating solely for the tax benefit. Bring back to the previous member's question, thinking about that decision to incorporate or not, there are definitely legal issues involved. There are lots of business decisions involved. There's lots of non-tax reasons that you want to incorporate or not, to protect yourself legally, to encourage bank finance. There's lots of good reasons to incorporate. There's no problem with incorporation. The issue is whether the tax system ought to be pushing people into incorporation or not. And thinking about those tax benefits, what's important to think about here is that some of the tax benefits that are on the table, thinking of the income sprinkling as an example, this isn't something that pays you more because you have better ideas. It doesn't pay you more because you work harder or because you invest more in your company. It pays you more because you happen to have a certain family type. If we want to have a tax system that encourages growth, encourages investment, we can do a heck of a lot better than just handing out tax benefits to essentially random families. We can do better than that, and I think that's what we should aim for with the tax reform.
Thank you. Mr. Kelly, it feels like you're part of the family these days because you come to the committee so much, and we're happy to have you again. And thank you for the deck on business fairness. I think that one of the things that what you spoke about was income sprinkling and the reasonableness test and the concerns around that. But would you not agree that there should be some contribution to the corporation in order to earn an income from it?
Sure. Well, look, there's two things on that front. One is the challenge, I think, of determining for the CRA what is an appropriate contribution for the income test, or for the test that might be used, the reasonableness test. Now, to be fair, there is a reasonable test now that the CRA does implement. The challenge that we have is a couple-fold. One is the additional measures that the proposals are intending to bring, we think is going to eliminate or reduce the amount of opportunities for younger people to get involved, even in a small way, in the family business. And that we do worry about that from a succession perspective, because you do want the entrepreneur to involve that next generation. So many business owners. I just was in Winnipeg and I met with a business owner, runs a successful trucking company, who said that he has had so many offers from private equity businesses to buy his business, but he knows the minute he does that, the jobs in Winnipeg and Manitoba are going to dry up and they're going to be moved elsewhere. He's resisting that and wants to make sure that he can pass on that business to the next generation. So I do think that we don't want to discourage that kind of activity, and much of this does. The passive income, the rules around income sprinkling, I also want to make the point that specifically with respect to dividends, we want to make sure that government doesn't get to decide who owns the business. I understand what you're talking about with respect to income, and that's why we already have the reasonable test for income at the CRA, but applying it to dividends means that government is going to be able to determine essentially who owns the business. That is concern for younger people. It's also a concern for us, for female entrepreneurs. 2/3 of business owners
Mr.
are
Kelly,
owned by...
I think you're...
You're already at a time, Mr. Commish. Go ahead, Tom.
Thank you, Mr. Chair, and thank you all for coming in and providing us with your expert testimony. I want to talk about retroactivity, and some of it is related to succession planning, which I'm glad that we are leading in that direction. There's a lot of misinformation about it. Some of it is due to the government side. Minister Morneau has said these will not be retroactive. But in the way I read the proposed section 246.1 on CDAs, it will become retroactive. In fact, even well-known tax specialists, tax accountants, have been writing saying that basically if you inherit a family business, that you could pay tax on it on gains that your predecessor made. So retroactive double taxation is the effect of some of the rules and proposals they have made. And I see Mr. Kelly's already pointing Mr. Wonfor, who wants to comment on this. But I want to talk about this retroactivity and about the double and sometimes triple taxation on income already earned. And when we talk about neutrality, that's patently unfair to double tax someone as it's making its way intergenerational. So maybe we'll start Mr. Wonfor, but I'd like to hear from Mr. Lantier on that as well.
Sure, happy to speak for a minute. With respect to the surplus stripping changes that are proposed by the government, there definitely is retroactivity built into those rules, and you'll be receiving, the Department of Finance is receiving a lot of representations on that. They say that the changes to 84.1 only apply to dispositions on or after July 18th, but that's not true, because you have to look back at all the transactions and determining whether you have a Section 84.1 problem. You have to go back and look at all the transactions all the way back to when it was first enacted, I believe in 1984. And that can create some situations where you thought you had proceeds which you could extract because capital gains had already been paid, but now you're going to force to pay tax at a dividend rate if you extract those funds out of a company. The same thing with the changes to 246.1. It talks about amounts received or receivable on or after the announcement date. So if you have a transaction that triggered tax beforehand, triggered a capital gain before the announcement date, but did not receive the funds until on or after the announcement date, there's problems with the planning right now. We don't believe it's fair. We respect the government's right to change their tax policy in respect to this area, but it should be going forward, not being retroactive.
So, Mr. Wonfor, sorry to interrupt you, but basically what Minister Morneau said when he said it was not retroactive, that's false.
And for capital gain stripping, it's absolutely, we don't agree with that.
Okay.
In fact, just a brief technical correction, but the changes to 84.1 and their impact on intergenerational transfers, the coming into force of draft legislation specifically says that they apply to any dispositions, whether before or after July 18. The law is the new rules apply to any disposition, whether before or after July 18. So they're absolutely retroactive. And for someone who's maybe passed away a year ago and had postmortem planning in effect, the advisors to avoid the double or triple taxation. I can't think. I was going to say they're murdered by these proposals, which is a bad term of phrase given in the context of post-mortem planning. But yeah, they can face tax rates up to 90%, 92%, and those are the proposals with respect to 84.1 that the government's tabled, that they've put out for consultation.
Get a minute, Tom.
Just on the CRA, one thing we hear from people who are proponents of some of these changes, they say, well, there's a reasonableness test now that'll be assigned. And I have a slide deck presentation from different tax accountants who say that basically it's going to ask the CRA to make a judgment call on whether a person's passive income, whether the TOSI rules, income sprinkling, is reasonable or not. But based on my experience with CRA for the past 2 years as an elected official, there's a complete lack of accountability for mistakes made by the CRA. So I'd like to hear both from Scott and from Ron on the farm side, the impact that has, the compliance portion with the CRA, but also from obviously the coalition against these tax changes, because what the government is basically be doing is giving a whole bunch of latitude to an agency and organization with a track record of making mistakes and crippling businesses.
Maybe I'll start. I think one of the concerns that we have, even if you do have a definition as to what is the reasonableness test, that is subject to interpretation. And when you get to CRA officials, individual CRA people may make different adjustments. I had the same thing happen just on an HST case. I had to take it through 2 or 3 people before it was resolved. So I think being very specific and very clear, as well as having training for CRA officials to interpret what is meant, creates a lot of concern, I think, for the farm community, because we don't know how it's going to be judged until we file those returns. Go ahead.
Mr. Kelly, did you have anything to add on that very quickly, or Mr. Wonfor?
I'll just make one quick comment with respect to that question. Absolutely, the professional community and the business community is concerned with the reasonableness test. The Department of Finance has set out a few principles, but are basically, I think, now going to leave it up to the CRA to administer that. I know from talking to certain senior CRA officials, they're not very happy with that because they don't know how to administer a reasonableness test. And I agree with you, there have been challenges in the past, and there will be challenges going forward with respect to this. You can expect a lot of tax litigation.
Okay, thank you. Last questioner for this panel, Mr. Sabara.
Thank you, Mr. Chair, and thank you to everyone that's come here today and provided some good stuff to think about. I've sat down with a number of tax experts over the last couple of weeks. I actually spent half of my Labor Day going over all the proposals in the consultation paper. And I understand where tax fairness is important and how we need to get it right. And I think the spirit of tax fairness and the road we're down is the right path. We need to ensure our tax system has the right incentives in place to encourage capital formation, to encourage small businesses to grow, not just to stay at the 15% level, but to move up to the 26% level on taxation, which is a good thing. Because it shows that businesses are succeeding, but we also need to ensure that we have the right proposals in place. I've looked at this consultation paper as in sort of 2 buckets in terms of, and I think someone alluded to this, as the professionals and what I would deem as the small businesses, your manufacturer, your engineering firm, and that we don't want to impede the second bucket to do what they're doing, and they're doing things very well in Canada. We have a growth rate of 3.2% this year, the best in G7. We've created hundreds of thousands of jobs, and I attribute that to a lot of SMEs hiring Canadians and investing in their businesses. But there is some, looking at the buckets, and 2 of them I think that do have merit. Extending the income sprinkling, not just to include income, to look at income, because that's already covered, to also include dividends. Because someone is working for an organization, a farm, they can still work for them, they'll still be paid. Now there's some clarification needed around reasonableness and continuous and words like that. The conversion of capital gains to dividends to capital gains. Again, the multiplication of a lifetime capital gains exemption. So there are some things there that do have a lot of merit in the initial set. Passive income, there's obviously a lot of questions that we need answered. But I do ask, and I say this from representing an area where we have 13,000 private businesses. York Region's very dynamic. There's a lot of growth going on driven by private business. And I know that we're consulting. I'm consulting. I speak to business owners every day. I know our government's consulting, and I encourage everyone to submit a brief by October 2nd. But I would do on the first two, and I'll turn over to Mr. Kelly. On the first two, don't you agree there is merit on those first two measures on examining them in the spirit of tax fairness, which we really need to do?
We've said right from the beginning that we are on board to work with government on any necessary tightening of tax rules to ensure that there aren't abuses by business owners. I do wish to defend, though, the so-called income sprinkling. One of the things that is very difficult for government to determine is not just and you know this from your riding, from the business owners you're talking to, that there is a formal role, a desk at a job, and a specific title that a person might have. But there are also a lot of informal roles that business owners play, either as a shareholder or as somebody that does work in the business. The reason we call them mom and pop shops is because mom and pop both have a stake in the business. And what these changes are proposing is making some pretty radical changes to that. And at minimum, it's going to create about a decade of uncertainty for business owners at a time where I just don't feel we can afford it.
And I will say and we heard this yesterday from one of our presenters on things. I've appreciated thank you for everyone when people avoid using the rhetoric versus what we're really the meat of the issues. Again, we need to look at tax fairness. We need to look at tax fairness for all Canadians. We've done this on tax avoidance as a government. We've put in hundreds of millions of dollars to ensure that all Canadians are paying their fair share of taxes, to ensure those services that Canadians depend on day in, day out are available to Canadians, and people have confidence in our tax system. So we've done that, and I applaud our government for doing that, and I'm proud to be part of the government that's doing that. On the tax fairness side, again, there are measures there we need to look at. For example, extending on income sprinkling, because if your son or daughter is still involved in the business, and again, what are we talking about? We're talking about moving the age limit from 18 to 24, okay, where arguably you could see that uptake is in reference to a lot of parents paying their kids and paying them out in a tax advantageous way to go to university. Going to university, great thing, but a lot of businesses using that loophole or tax advantage situation to fund someone's endeavor where other folks can't fund that endeavor at that basis. And so I think there's a real chance for us to do this right, to consult with businesses. And look, I was awarded an Entrepreneurial of the Year award from Grace McCarthy 25 years ago in BC. I love entrepreneurs, but we got to get
Any
that.
thoughts on that question? Because we do have to go to the next panel. Ron.
Just a quick comment. I hear the word loopholes a lot. It's using tax planning tools. And one of the things that gets lost in this discussion is the fact that businesses and farmers need certainty in their business and tax planning. And I think that's one of the things that has really brought a lot of people to the forefront. I've had farmers come to me and said, look, we spent $40,000 over the last 2 years setting up our organization so it transfers to the next generation. Now we don't know if we're going to have to go and spend another $20,000 to do it the same. That's why we need long-term policy in place, and business has to be engaged in that discussion so at least there's certainty for planning moving ahead.
Mr. Lantier.
Thank you, Mr. Chair. I believe that income splitting and income sprinkling is a tax policy issue. There's some very aggressive plans that are in place with so-called alphabet shares, A, B, C, D, and one pays dividends to whoever one wants, whatever is going to secure the best tax result, you pay on the A, B, C, or D shares. So I think there's a policy issue. The taxation unit in Canada is the individual, not the family unit. But I think the government's gone about this thus far in a very ham-handed way. My personal suggestion for addressing this and addressing 80% of the problem is to extend the existing kiddie tax with no reasonability test to all children up to age 24. With respect to multiplication of the lifetime capital gains exemption, one lifetime capital gains exemption per married couple or common law partners. I think that's simple, understandable, addresses 80% of the government's revenue concerns, and I'm opposed to income sprinkling. I think it's poor tax policy to allow it. I just think there's a much smarter and sensible way to go about it.
Okay, thank you. I do have one quick question, which really relates to. I'm hearing from some people extend the consultations, others end the consultations, but I guess in terms of certainty in the economy. We are holding hearings as a committee on pre-budget for 2018. They're on competitiveness and productivity. But in terms of overall certainty in terms of the economy, that there's not a flight of capital, that people are making decisions based on the rhetoric that's out there, how important is it that the government brings clarity to this issue and does it quickly? Whoever wants to answer. Probably more related to the tax people that are in the system. Dennis.
Certainly support the call for more extensive public consultations on the whole fairness of the tax system, but we would not support the government not going ahead with the current proposals because we do think they are a step in the right direction. That being said, we would support the call for a more comprehensive review.
Mr. Lente, be the last comment.
We are there is significant uncertainty, and I get private emails every week saying, I'm pulling my money out of the country. This is not a National Post op-ed or for the Globe and Mail. These are private emails where people are silently saying, I can't put up with the uncertainty. I don't agree with what was said before, but almost like a royal commission on taxation. We don't need a royal commission on taxation. We can address the policy issues that have been tabled here on all three fronts, I think, in simple and sensible approaches. They're not the approaches that have been set out by the government. I do think we need an independent review, but there's been discussion here, Mr. Chair, about involving the business, let me call them lobbyist group, and this group and that group. We need the Minister of Finance to establish a committee, set out clear terms of reference, and have that committee meet with no political influence, no Department of Finance influence or Revenue Canada influence. Such as the Mintz Committee, on which I was proud to serve in the late 1990s. Free from political or Department of Finance influence. Department of Finance folks, and I have many friends there, will not like it. But that's the only way to get a dispassionate discussion. Thank you.
Okay, I do want to thank each and every witnesses and members as well for keeping relatively on target on the issue. It is an important issue, and we covered a breadth, but I do think it was a really good discussion on the points that are out there in the discussion paper. So thank you all. We will suspend for about 3 minutes while the next panel comes up. Meeting suspended. Okay, I think we're ready to go, and we have we have 5 witnesses this session, right? Okay, that's helpful because we're starting 15 minutes late. So we'll call the meeting to order, and just for the record, pursuant to Standing Order 1082, we'll do a study on of tax planning using private corporations, and these, just so that you're aware, witnesses, the minutes from this committee, any paperwork you give us, etc., will be passed on to the Minister's office as part of the consultations on the tax planning using private corporations document that is out there, and that information will go without recommendations from this committee to the Minister. So with that, we will start. Welcome all, and thank you for in many cases quite short notice trying to put your thoughts together, but we really do appreciate you appearing today. We'll start with Mr. Wiesman, Chartered Professional Accountant. Go ahead. The floor is yours, and welcome.
Thank you for inviting me to this session. I really appreciate the opportunity to express not just my views, but views of many tax people out there. I sit here and I was listening in the gallery before, and my head, I just keep shaking my head saying, wow, why are we here? Is this really necessary? I've practiced in tax, I hate to say it'll be 30 years next month, and I've never seen outrage and anxiety in not just the business community, but in the tax community as well, about items that, in my opinion, and you'll hear why, some of them are quite simple to address, but we have proposals that were released in the middle of July with a 75-day consultation period, and maybe, can someone, I don't know if it's for today, but the website says that submissions are due no later than midnight Friday, the 29th, but we've been told submissions are due October 2nd, and yesterday at the Tax Foundation conference there was some inconsistency, so maybe we can get some clarity, because I don't have a submission for you today because of short notice, but I would like to get you one. But I think that we all need to take a step back. It's really important, because you can't fix, in my opinion, you can't fix solutions without knowing what the problems are, and no one can see the forest for the trees in this case. So I do think that the government, their policies, objectives with respect to income splitting, with respect to corporate deferral, are valid policy objectives. I think they're in line with the election platform that they ran on, and I think they are achievable objectives in a much, much simpler manner than proposed now. And I'll give you some suggestions. I'll sort of throw a lifeline out there and say, look, if we want to end this, if we want to sort of salvage what's going on now and actually move ahead with objectives and the economy and reducing uncertainty for businesses, here are some ideas. So again, I think the policy intent is fundamentally sound, in line with the election platform. I think the proposals, however, I know, they go way, way, way beyond that. And I'm speaking to you as someone in the trenches for 30 years dealing with tax legislation, tax changes. I started in tax when tax reform came around in '87. I've seen the capital gains exemption eliminated on capital gains on property. I've seen it restricted. I've seen kiddie tax brought in to deal with income splitting and income sprinkling, which is, I guess, a term that's now been coined. So I have ideas, and on those I'll talk now. And I do also, before I forget to get it out there, there are no ifs, ands, or buts. These rules, many of them, most of them, are absolutely retroactive. It's not true to tell the Canadian people that these rules are just going forward. As we've heard earlier, tax attributes of the shares that you own in your family business that were created 10 years ago because of transactions, last year, 20 years ago, they impact the calculation of the tax that will be calculated under these rules. So while it may say for transactions after July 18th, these rules are retroactive because there's no grandfathering, there's no transition, and it's like telling someone, you know what, you have your house, you've accumulated all that growth tax-free, you know what, we're changing the rules, your house is now going to be taxable. And it's not, but on the go forward, only if you sell it from now on. But if you sold it before we announced this, okay, you're fine. That's retroactive tax planning, and that's what some of these rules do to businesses. So what I'd like to say in the brief time that I have, I think that income splitting is a valid policy target. I think reasonability, I know that reasonability is not the way to go. Uncertainty and subjectivity in the tax code is a recipe for litigation, for costs, for unhappy taxpayers who don't have the funds to litigate. You cannot leave, you have to take judgment as much as possible out of the Income Tax Act. We need objectivity. So reasonability test on dividends, it just can't be determined. Reasonability on salary is hard enough, but at least there are ways to do a functional analysis. You can't do that with dividends. So I heard one example of extending the kiddie tax to age 24 as maybe a compromise of how to deal with curtailing income splitting. How about figuring out, okay, if someone spends more than X amount of hours per year in the business, the rules apply or won't apply. This kind of rule is actually used in the disability tax credit area, an area that I was involved in many years ago advising. With respect to life-sustaining therapy, we couldn't define what that meant, so the rule was put in, if you spend more than 14 hours a week on life-sustaining therapy, you're eligible for the DTC. So something like that could be used as opposed to a reasonability test. When it comes to corporate deferral, I just shake my head. Why are we talking about passive income and taxing passive income and adding, getting people up to 70% and penalizing people for earning passive income in a corporation? The reason is there's this corporate deferral because my corporate rate is lower than my personal rate. So this has been dealt with. I'm just shocked that we get these proposals about passive income. We have personal service business rules in the Act. So a long time ago, athletes, entertainers, they'd incorporate themselves. So a hockey player working for a hockey team would incorporate and say, you know what, pay my company, I'm going to get corporate rates instead of employment rates. So the government brought in the personal service business rules and say, if you don't employ more than 5 full-time employees, you don't get the small business rate. Got rid of the small business deduction for incorporated athletes. More recently, it was used for computer programmers and other professionals who incorporated to get access to the corporate rates. Computer programmers fall under the personal service business regime if they're incorporated, and there's now a surtax on personal service businesses. So that surtax brings the corporate rate up without increasing corporate rates on everyone, which I don't think is what the government wants to do. The surtax increases the effective rate, it reduces the deferral, and it can be targeted at the people I think the government is really trying to target, and I'm one of them. Right? I'm throwing myself on the sword here. If you want to stop people like me from incorporating just to get the benefits of a low corporate rate, stop me from doing it. Tell me if I incorporate, I'm going to have a surtax. But don't tell me that you need to affect all the family businesses all across Canada. So these proposals could stop there, because I think those are the government's policy objectives, but they go way beyond. The anti-surplus stripping rules, the 246.1, which we won't get into, they are just so rife with ambiguity and uncertainty, they're impossible to plan for. And finally, because I imagine I'm running out of time,
go ahead.
These rules, as proposed, will make a family decide to sell their business to an outsider instead of pass it on to the next generation. And there's no ifs, ands, or buts about that either. These rules say if you sell to a family member, you're going to be taxed at dividend rates of 45% if you sell to an outsider. So last thing, that's obviously not right. And last thing, who are you going to sell to? Private businesses are not going to be interested in buying new private businesses or existing private businesses because they're going to be looking to get out of the private business world with these rules. So who's going to buy? Public companies and foreign corporations are going to be buying up Canadian family businesses if these proposals go ahead as proposed. And my last comment, I really think a collaborative effort would go a long way to resolving these issues because there are people in the profession like myself who are level-headed, understand the policy objectives, and have experience. And if we sat down in a room with finance and whoever the right people are, with the economists, I think we could hammer out proposals that would be acceptable to everyone in this room and, more importantly, to Canadians.
Thank you very much, Mr. Wiseman. Just to clear up, I think, the confusion on the dates. The end of consultations with the Department of Finance is Monday, October 2nd. They don't have a midnight on it, but usually it is a midnight. Our consultation, our deadline for submissions to this committee, the Finance Committee, is September 29th at midnight, which is Friday. The reason being because we want to pass that information on to the Department of Finance on Monday morning or Monday sometime during that day. So the firm deadline for finance is October the 2nd, which is Monday. The other one, we may have confused it a little with our deadline separate, but we have to do that in order to get the information there. Turning then to, as an individual, Ms. Workham. Welcome.
Thank you. So I also very much appreciate the opportunity to appear before you today and share my thoughts. I'm someone who was raised in Alberta and have lived in Quebec for 25 years, and I'm a lawyer who has practiced human rights and employment law in Ontario for close to 30 years now. I'll make it very clear, I don't practice tax law, so I am by no means a tax expert, unlike my colleague here to my right. And I also want to make clear that these are my personal views. So I was prompted to engage myself in this tax debate on a more public level in response to an email that I received from the president of the Canadian Bar Association a couple of weeks ago, 3 weeks ago perhaps, basically encouraging members of the CBA, such as myself, to write to their MPs in opposition to these tax reforms, and also informing us as members that the CBA was going to take a public position in opposition to these tax reforms. And so that got my attention, and I immediately responded to the CBA president, as well as copying my MP, to ensure that that it was known that the CBA does not speak for me. I'm a lawyer, and I very much support the tax reforms that are currently being proposed. I think it's important to speak up, and so that's what I've done. And I'm joined in that by a number of physicians as well, many of whom are young female doctors who I'm sure you are aware have published a very public and articulate letter that similarly supports the tax reforms being proposed, and also states publicly that they are not in agreement with the position being taken by their professional representative in that situation, the CMA. You know, and the author of that letter, I heard her being interviewed on The Current a couple of weeks ago, very articulate young woman who is currently herself on maternity leave. So my starting premise is that it's a good thing to build a society in Canada where we all have access to a solid education, healthcare, housing, safe and vibrant communities, recreation and sports opportunities, and a clean environment. And perhaps it's misguided on my part to believe that the revenues generated by these tax reforms will funnel down to improve, towards the collective good, but certainly that's my hope. The bottom line for me is that to sustain and improve the public institutions and social programs that Canadians, I think in general, support, requires obviously tax revenues. And my view is that the most effective and just means to generate those revenues is through a fair, transparent, and actually progressive tax system. To me, it doesn't make sense that those individuals most financially and otherwise privileged in our Canadian society, including myself, who've had access to publicly subsidized post-secondary education, are further advantaged by the tax system. I do, however, think that tax reform should be comprehensive, and in that regard, I think that we need to start with the private corporations, as the government is currently doing, but I also think we need to revisit those other aspects of the tax system that are similarly regressive. For example, income splitting of pensions. You know, there's been some criticism, I think justifiable criticism, by, you know, small businesses saying, look, federal government pensions, for example, recipients are entitled to split those pension incomes. And I agree, that's not consistent in terms of giving effectively an income splitting benefit to pension recipients. RSPs, why should it be that the more money I make, the greater access that I have to RSP contributions up to a maximum cap? I appreciate, but it is fundamentally based on a percentage of income up to a cap. And why should it be that someone like me, who can most afford to send my kids to university and pay for them, has access to government grants through an RESP system, whereas others earning family incomes of $49,000, the average in Canada, are barely able to pay their mortgages or rent, let alone put monies into an RESP to help fund their kids' education with the support of government grants. And then the tuition rates are going up because we're lacking public resources to adequately fund those public post-secondary institutions. The last couple of comments I'd make is one is relates to gender. So I've heard a lot of spin around the subject of gender and that these tax reforms are somehow damaging to women. I don't buy that for a moment. I don't have the data to prove it, and I think that it's somewhere that the government could improve upon is actually coming up with data that, you know, answers the question, is this tax reform going to disproportionately adversely impact women? My intuitive sense is that women, single mothers in particular, who are, I believe, disproportionately represented in terms of the poverty figures in this country, will be the beneficiaries of added tax revenue, assuming, of course, that those revenues are used to fund social programs and public institutions on which those women and their children rely. And finally, just in response to a comment that was made earlier that I heard in the gallery about the risk that small business people are taking, I appreciate that risk, but I also have to say that, and so the theory being that you need to save within a corporation and your business so that you can fund years that are not, not so great. As a lawyer who works daily with people who've been laid off, employees who've been laid off from their jobs, many of whom don't have pensions or benefits once their employment is terminated, I can say that those individuals are left with having to rely on their savings, their personal savings, just like everybody else, to fund them through difficult times. And they also work very hard for the money that they save. And so I don't, as I say, I feel that there should be a more level and equitable treatment of all working people in Canada. Thank you.
Thank you very much, Denise. Turning to Terry Solomon, who's a partner tax services with MRSB Group. Welcome, Terry. The floor is yours.
Good morning, Mr. Chair and committee members. I would like as well to thank you for the opportunity to speak here today. My name is Terry Solomon, and I practice public accounting in Charlottetown, PEI, for the last 27 years. I can say without a doubt these proposals are very damaging to the small business clients I represent, as well as small business across Canada. I don't think it's an overstatement to say that these are the most significant tax changes that have been put forward since the Royal Commission in the early 1970s. And I really feel changes of this magnitude need to be done with a genuine stakeholder engagement. The proposals as well were accompanied by rhetoric such as closing loopholes and using corporate structures to avoid paying their share of tax. Frankly, the business community finds this type of communication offensive and are made to feel like they're being some sort of tax cheat, even though they're complying with the laws of the land. I believe the business sector needs to be encouraged because when they have success, it creates jobs in their community. So I am going to talk about a few specific concerns I have with the proposals in the time I have this morning. First of all, my main concern is I believe the proposals actually miss their stated target of targeting the wealthier sector of society. I believe there will be a flight of capital from Canada, and I believe these changes will impact recruitment and retention of skilled labor, such as physicians and others. The proposals with respect to income splitting will actually disproportionately impact the middle class more so than the upper class. These proposals devalue the real contribution a spouse makes to a family business, whether that contribution is direct or indirect, whether they're actually going to the business every day or whether they're supporting their other spouse in order that the business can maximize its profit and the amount of tax it will generate for government. My written submission to Finance, which I have already provided to Finance, in it I note that even a family of $70,000 annual income could be faced with a 30 to 40% tax increase if these proposals go through. So we're not talking the high-end income. We're really talking very much your neighbors, small business owners in Canada. The discussion paper that was issued by the department compares a business person with that of an employee and how much income tax each of them would pay. It's an overly simplistic analysis that's in that discussion paper, and there are many other factors to consider other than the pure upfront tax calculation. My second concern is the significant uncertainty around the new reasonability test. This test will give Canada Revenue Agency the power to unilaterally determine the value of certain adults' contribution to a business. This test will be very subjective and fact-based. This is a significant new burden on small business who are not going to have tracked the information that would even be needed to defend themselves, and will be the subject, I am quite confident, of much new litigation and disagreement. Just as one example, does a wage that's paid in Prince Edward Island for a service be different than a wage paid in Ontario? How is CRA, and I almost feel bad for them, how are they going to actually administer this test in reality? I would say, in my view, the most egregious proposal relates to the taxation of passive income. Passive corporate income is already taxed between 50 and 55% in Canada. Depends on the province. In fact, it's taxed at a higher rate than almost most personal rates. So there is a tax deferral without question on the initial capital that the passive income may have generated if that capital came from the small business deduction. However, that is not a loophole. That was something that government intended, was to give small business access to capital for either future expansion or for working capital during slower periods. These proposals will eliminate the long-standing concept of tax integration in Canada, at least on the payment of some dividends. The effect of this for a PEI corporation is the passive tax rate could reach 74.55% and would have a similar result in other provinces. This is clearly unacceptable, and I'm hopeful the government would not have intended this tax result. Holding companies are also used as a vehicle to accumulate funds for retirement in lieu of an RRSP. funds accumulated are similar in some ways to an employee who has a registered pension. However, employee and employer contributions to a pension and the income realized bear no tax whatsoever until withdrawn, which could be many decades later. Whereas the business owner who uses a holding company for investment has already paid a tax of between 15 and 30% on the initial capital and an annual tax of 50% on the earnings that are realized. For all these reasons, I would strongly recommend the proposed changes for passive investment be abandoned entirely. A fourth concern I have relates to some of the proposed changes of Section 84.1. While I do agree some changes here are required to address certain planning that was happening, the proposed changes as currently worded lead to double and even triple taxation and will negatively impact estates and common post-mortem techniques, some of which were already in progress at the time of the announcement. Government has recognized that 84.1 does impede succession planning for family business, and I encourage them to, as part of this consultation process, to also deal with that and not just have that in the discussion paper, but not actually deal with it.
If you can sum up fairly quickly.
Short. I also wanted to address, I believe it's been mentioned already, these proposals do have retroactive application. Taxpayers are entitled to be able to structure their business affairs with certainty. And many of these structures have been in place for many years with the full blessing of Canada Revenue Agency and in the courts. It's just, I don't believe that it is fair to fundamentally change the system, and make no doubt it is being fundamentally changed here. For the reasons outlined above, I believe the proposals as presented are deeply flawed and should be set aside. I do support, however, a review of the current corporate tax system in Canada with a view to modernization of the system. This would be best done through a Royal Commission on Tax Reform, with the mandate being to look at all of the issues that are being raised through this consultation process and come up with a reasonable compromise. Thank you.
Terry, turning to Ms. Dutt, family physician as an individual. Welcome.
Thank you. I've been up since about 3 o'clock taking the flight out of Cape Breton this morning, which Ms. Wright might have taken in the past. So it's been a long morning so far, but I could just say ditto to what Denise has said, but I'm going to read you what I have here. So I am a family physician from Cape Breton, Nova Scotia, and I'm the daughter of a small business owner. I'm here to speak to the content of a letter that has been signed by close to 500 physicians and medical students across the country. And the letter signatories and I are in favor of the proposed federal tax changes for Canadian-controlled private corporations, CCPCs. And the reason why we are in favor is that we support greater equity amongst Canadians. But let me say first that this is not unequivocal support. It is regretful that the federal government has not closed the tax loophole of being able to be paid the stock options used by CEOs and other high-income Canadians. Given that Canada's top CEOs earn 193 times what the average worker earns, it is imperative that the government keep its election promise. As well, there are various other policies that can be implemented that have been mentioned, in particular in the last section, that should also be considered. So Cape Breton, it's a beautiful island with rolling hills, exquisite ocean views, and that's the image that you tend to see in tourist brochures. But in contrast to those scenes, 1/3 of our children on the island under age 6 live in poverty. There's a First Nation just down the road from me who cannot drink, cook with, or bathe in their water. And I had a patient that I saw yesterday in clinic who holds 3 minimum wage jobs, barely sleeps, and is struggling to take care of her daughter as a single parent. In contrast, the vast majority of physicians remain amongst the top 1% to 5% income earners in Canada. So we, as doctors, recognize that adequate tax revenues are needed to fund social programs such as affordable housing, social assistance, legal aid, hopefully one day national pharmacare, and the health care system itself. These programs directly impact the health of our patients, and we believe it is important for us to contribute to their sustainability through an adequate tax base. We do ask that any tax revenue that is gained through these tax changes go to funding policies and programs needed to ensure the health of our patients. Now, physicians are in a unique situation of being publicly funded, but mostly self-employed, often running practices with varying amounts of overhead. And many physicians do have legitimate concerns about their work situations, such as lack of extended health benefits, parental leave, or pensions. We have long training periods, incur significant student debt, enter the workforce late, and have high rates of burnout. However, we feel that these issues are best addressed at their root with the best of all available policy solutions and not in inherently unstable ways, such as through a tax system that is constantly evolving. It is important to note, however, that the methods that have been primarily used by some doctors, lower tax rates on passive investment income through a corporation and income sprinkling, are legal and were in fact encouraged by several provinces in lieu of fee increases as part of negotiations, despite federal jurisdiction over relevant tax policy. So we know that these benefits are advantageous, as was pointed out earlier, primarily for certain incorporated doctors with specific family situations and those who earn enough to supersede traditional saving vehicles available to all Canadians. This seems unfair to single-parent physicians, of which I am one, and those with young children or those who are unincorporated. It also seems unfair that these benefits are not available to Canadians with similar incomes who cannot incorporate. It is also worth remembering that only 60% of physicians are incorporated, and this option has only been available in some places in the past decade or so. However, the changes that we are supporting cannot be made without a transition plan nor in isolation, but rather as a part of a comprehensive review of tax policy with a view to equity. As such, we call on the federal government to do 4 things. One is implement proposed reforms to CCPCs as a first step in a comprehensive reassessment of tax policy in Canada, especially mechanisms that disproportionately benefit large corporations and the wealthiest Canadians. 2, outline a clear transition plan for savings held in medical professional corporations. Physicians who have used these methods under existing agreements to prepare for retirement should not be unfairly penalized. 3, work with provinces and territories to review options for access to extended health benefits, parental leave and pension plans for all Canadians, as well as payment reform options that would be available to all physicians that address these important aspects. And lastly, work with provinces and territories to tackle the issue of increasing medical student debt by lowering tuition for incoming students and implementing forgiveness programs for existing debt. Now, I do realize that the federal tax changes go far beyond the concerns of physicians, but this is the world that I know, and so it's the one that I'm speaking to. And what I feel, and what many physicians across the country feel, is that an equitable tax system is a goal that we can support and can pay into. Thank you.
Thank you, Ms. Dutt. Turning to, as an individual, Mr. Paquette.
Thank you. Merci beaucoup, Monsieur le Président.
Thank you, Chairman. I'd like to thank the committee for giving me this opportunity to express my views with you and the members of the panel on a number of important elements of tax planning using private corporations. I am a full professor of the School of Management, Economic Department, University of Montreal. For 9 years, I was a member of the National Assembly, where I assumed a number of functions. And I was the senior economic advisor of the Premier. And I was also responsible for part of the economic program of the government for a certain period. And over these 7 years, I was able to preside over the Public Finance Committee. So it is coming back to experiences that are familiar to me. And I did also have some experience with the Department of Finance at the federal level. I am familiar with the theoretical and empirical matters, as well as the practical matter of establishing budgets and fiscal policy and the various issues that must be debated. Because when we talk about the tax system, we are talking about the impact on the economy. We're talking about the impact on individuals who are contributing to the contribution of wealth. and the sharing of this wealth. As part of my preliminary remarks, then I will be dealing with a number of principles, and I hope that we'll be able to discuss them in greater detail. The last comprehensive reform of the Canadian tax system goes back to 1971, following the Carter Report in 1966. And the foundation of this remains very similar. There were a number of various reforms enacted. For example, there was a very good economic reform, and namely the implementation of the goods and services tax. And there were other elements under Jack Mintz that resulted in a reduction of corporate taxation rates. Something was necessary at the time, and that allowed for the improvement of the neutrality of the tax base. But I think that we have to observe that the economy has changed. Service sector has become more important. This doesn't mean that we have to sacrifice the other sectors of the economy, but we have to take into account the various elements of the economy. And we have to realize what are the aims that we wish to achieve. We must take into account both fairness as well as efficiency. And unfortunately, in the public debate, very often they are pitted against each other as if they were mutually exclusive. This is not necessarily the case. And among the various reforms that have been suggested by the Minister of Finance and the government, there is an element that was identified, namely the tax fairness or lack of neutrality. Do we encourage businesses and entrepreneurs to incorporate so that they're able to benefit from tax measures, quite illegally so? And the effect of this means that we have to find other ways of increasing income, not only for purely tax reasons. And I think that we should not do indirectly what can be achieved directly. There's lots of debate about whether taxes are too high or too low. But I think it is important for us to realize that the tax system should be based on proper planning. And should it encourage incorporation for tax reasons? And in some cases, there is a passive income that doesn't allow the business to grow. And I think that certain improvements could be made in this respect. For example, the contribution through capital gains that would not be taxed to the same extent. The question of neutrality then means that comparable situations should be treated in the same way. The idea is to ensure that we can improve this neutrality. I think that is an important principle. And I would say then that these proposals are heading in the right direction. That being said, we have to avoid certain situations that may be considered special circumstances, whether it would be multiple taxation of the same income, or there might be retroactive effects on taxes. There is no reason for this, either practical or theoretical. And there are certain issues relating to the transfer of businesses. This is a concern that was raised on a number of occasions and that we can probably come back to. I think work has to be done on this. My friend worked on this in the government of Quebec at the time, and there was an epic debate held within the government, not a partisan debate, but among tax experts, since these are significant issues. In this respect, I think it would be advisable to have a comprehensive reform of our tax system. This does not mean that there are not specific issues that can be better adjusted to improve fairness and do away with the inequities in the system. And I would like to conclude saying the purpose is not to jeopardize the tax competitiveness of Canadian corporations and the Canadian economy. We have a number of concerns about what may be done in the United States in the coming months. I think that we do have to maintain the principle of tax competitiveness, but this has to be done in the right way, and this does not mean that it should be done through unfairness. Without achieving perfection, then, this is a subject that I will find in a certain article. I said that perfection is not possible. And I think that we can certainly improve the situation, and I believe that the purpose of this hearing today is not to encourage us to rush through something, but to see that our action is properly founded.
Much to all the witnesses. In order to get 8 people on, we'll have to hold people to about 4 minutes each. So if you could keep your questions pretty short and snappy, and responses the same. Starting first with Mr. Fergus.
I'd like to thank all the witnesses that come here before us, and I'd like to put 2 questions to the experts. I think that if we could hear from everyone, perhaps you could give me a 10-second answer. I'd like to know whether the present system, as it exists at the present time, does offer advantages to the owners of private Canadian corporations who are not salaried employees, as opposed to unincorporated. The reason why there should be a differentiation of businesses and individuals in the tax system is because the businesses are not fictional creations. The tax treatment should be different, but when the system encourages people to incorporate for tax reasons rather than business reasons, then of course we are not serving the proper aims.
I'd say yes, as I mentioned, within physician structures there is inequities between who is incorporated and unincorporated for various reasons, but 40% of physicians are not incorporated, and again that it's also compared to the vast majority of Canadians who are not incorporated.
Thank you, Dr. Dutt. Mr. Solomon?
Well, to that I would say certainly there's many reasons to incorporate a business. The lower tax rate in order to be able to fund expansion and working capital is clearly one of the reasons, and it's something that past governments encouraged and wanted that incentive. I don't want to call it a loophole, I want to call it an incentive.
Yeah, my understanding and perspective is that the incorporation of private individuals who are able to privately incorporate do enjoy a significant financial advantage over those earning comparable incomes who are not similarly able to incorporate.
I'm sorry, I just want to clarify the question. Was it just in general, are there corporate benefits to tax savings from incorporating? Or is
I just want to know if there are some inherent advantages to the system as it exists today for those who are incorporated as opposed to those who are not, which include, of course, salaried persons.
Yes, there are.
So then, thank you very much for all responding to that question. My other question then would be, which give you a little bit longer to talk about, and some of you already started there, is that fair? Monsieur Paquet, Dr. Paquet.
Comme je l'ai mentionné,
as I explained, there is an unfairness when similar situations are treated differently in the tax system. And what I said is that the issues that have been brought up by the government are certainly relevant ones. We are not talking about jeopardizing the competitiveness of businesses, nor is the idea to prevent businesses from investing in their development. That is something that is important. There are certain concerns about special circumstances that should be addressed, but I would say that unfairness is one of the elements, but it is not something that should be pitted against efficiency, the need for businesses to be able to grow and to contribute to the economy.
The problems we've talked about, there are various reasons why someone might incorporate. So I guess I would just say that from the perspective that I'm speaking from as physicians who are higher income earners and often use benefits from a corporation to defer taxes, to pay less taxes, to have a higher income, that's the angle that I've been coming from, that it's not incorporation necessarily as a problem, it's using methods to decrease your tax burden when you are already quite a high income earner.
I would say any tax system, there is going to be some that are taking advantage of certain things that maybe was not intended. But I do believe, for the most part, the current system is working. But as I mentioned before, I do think that, and that's really why a comprehensive review of the system to deal with any of those types of inequities would be appropriate.
My view is that I obviously don't think it's fair, and not only that, I'm not convinced that the current tax regime is delivering value to the economy. For example, if the policy intent is to retain earnings in a corporation so as to expand that active business, something like passive investment does not achieve that policy objective. It's merely a mechanism to shelter from tax or defer tax on income going to that individual who's incorporated, as opposed to using that money to actively or to expand the active business and thereby arguably benefit the economy.
Concise.
Yeah, I think in 80% of the cases, yes, it's absolutely fair. I think there are some types of corporations that could be where it's not fair. And I think to look at corporations in isolation is also unfair. Individuals who have losses can use their losses against all sources of income. Companies, when they have a loss, those losses are trapped inside the corporation. So we could have this debate about what's fair which way or the other. But I think tax incentives for corporations to grow capital, to provide capital to corporations is fair.
Thank you all. Turning to Ms. Raitt. And welcome back to the committee.
Thank you very much, Mr. Chair. I appreciate it. This question is going to be for Dr. Dutt. I share a common birthplace with you, Cape Breton Island. And this past weekend, Dr. Dutt, I was in Nova Scotia, and I actually attended the Doctors Nova Scotia Town Hall, which was attended by over 400 physicians. And what I learned there was that there's a serious concern of the physicians in Nova Scotia about the effect on patient care and health care that will come from these tax reforms, these tax changes being put into place. Now, I know you gave a stat about 60% of doctors are incorporated. Doctors Nova Scotia tell me that 75% of Nova Scotia doctors are incorporated, and it's important for this reason. When they surveyed their membership, they found that 451 doctors out of 864 who responded said that they would consider moving away from Nova Scotia. Now, Dr. Dutt, you and I both know one thing coming from Cape Breton. There is a serious problem with lack of family physicians in Cape Breton. And you know the outcry from the community, and you know the emotion in the community over this. So I was very surprised to hear that your first recommendation, being a physician in Cape Breton, knowing the impact that this will have on healthcare for Cape Bretoners, would be that you say to the Liberal government, go ahead and implement these things. So I'm wondering if you can tell me why you think these changes will not have an impact on Cape Breton healthcare when your colleagues in Nova Scotia overwhelmingly say it will.
Yeah, and I appreciate that you attended that meeting, and I know it was well attended. I also do know that there were quite a few people there who do support the changes, and it is a difficult environment, I think, to try to bring some of those perspectives forward. So just to say that, you know, clearly the sentiment there was against the changes, and I fully recognize that. And I guess, as we said in the letter, and I've tried to speak to, there are definitely concerns that physicians have about the system, and it's feeling like tax policy is not the best way to address those concerns. So that's kind of the main reason. And I feel like coming from Cape Breton influences me even more. So when I know the kinds of incomes that my patients have, when I know that I can have a pretty decent income, not even, you know, I work not overly, not too many extra hours. I work decent hours. I am on call. I do things that physicians do, but I earn much more than they do. So I also recognize that as physicians, I think it's when you're working in a low-income area, you need to look at that aspect also. But I will also say that given that medical associations came out so strongly against the changes, and I know because members asked them to, there hasn't been a space to put out surveys that see, do you support the changes? That was never a question on that survey. So that's one thing I think, just there hasn't been a space to bring that voice forward. And I guess lastly, I just say there have been many times through history where physicians have kind of said that patient care will be harmed, we'll leave the country, we'll leave the province. There are already challenges to recruiting to small places, to rural places, to places where the pay might be lower than other provinces, and there hasn't been the evidence to show that the tax policy changes will exacerbate that. We've seen actually physicians, coming from the US to Canada in recent years, much less physicians leaving Canada. So not to say there won't be impacts, but I think it actually harms us when we are trying to negotiate for specific things in our provincial negotiations to make these kind of threats now that may or may not come to be, because the tax changes likely will come to be, and then we want to try to negotiate for something else later. It gives us a weaker position.
Try and leave time here for one more quick question.
Thank you very much, Mr. Chair. For Mr. Solomon, thank you very much for coming today. I was also in Charlottetown on Friday, actually, and I ended up having had a chat with your partner, Lloyd Compton, who came to one of my town halls. Now, Mr. Solomon, what I understand from what I heard in Charlottetown is that the three main industries, and maybe the chair can correct me, are farming and fishing and tourism. And in fact, tourism is about 6.5% of the GDP. 80% of the 80% of the people who work in tourism are small businesses. There's 1,300 fishermen who are incorporated in PEI, another huge number. And of course, when it comes to farms, 98% are family-owned businesses. They're farm families. Now, Mr. Small, I'm wondering, do you think Prince Edward Island is going to have a disproportionate impact given the fact that the economy is so intrinsically tied to small business and the impacts that this will have on small business?
Yes. Certainly, PEI's economy is very much private sector driven. So any changes that will impact the capital that's available for small business is going to have a very negative effect. I can speak specifically to some of these businesses, all three of those sectors you mentioned are very capital intensive businesses with significant risk involved. And frankly, it is extremely difficult to, in many cases, have financial institutions want to finance growth. So these passive proposals, I know people are saying, well, if it's in a corporation and it has this deferral, but sometimes you can't just reinvest it in your business that day. You have to leave it in there for a period of time. Maybe you have to save up for an expansion or the right business opportunity. So really, it will impact the PEI economy by anytime you take that much capital out of the economy, it's certainly going to impact.
Okay, we'll have to stop it there. Mr. Dussault.
Thank you, Chair, and thank you for the witnesses here with us today for all the observations they've made on this matter. I'm going to do my Mr. Fergus by asking a quick question, hoping I'll get a yes or no answer. It is to see whether or not we can embark on a common path with respect for businesses to provide income sprinkling throughout their family. It seems to me, I want to know from you, yes or no, is it appropriate to set up a criterion according to which they would do that? A criterion for contributions to the businesses by sprinkling income to members of the family. Mr. Weissman.
That's a hard one to give a yes or no answer to. I think it is part of the government's platform that was something that they were concerned about, so I think it's a fair policy objective, like I said before, but I think it's important to have it based on some measurable, quantifiable measure of contribution as opposed to subjective test.
No, I don't agree with income sprinkling of any form. But I would say on balance, if you're going to allow, I do think it's important to narrowly define and not leave ambiguous reasonable contributions to the business by family members. I mean, absolutely family members who contribute to a business should be reasonably compensated, but I do agree that very clear criteria has to be set out.
I would concur as well. I do believe that if there is going to be some sort of income sprinkling rules put into the legislation, it needs to be a bright line test. It should not be a reasonability test. And I do believe that a spouse needs to be viewed differently than other family members. I really do believe spouses should be looked at as a family unit. And in that situation, I do not believe the tax on split income rules should apply. But we're getting into specifics on that. But I do believe it should be a bright line test.
Yeah, I'm not a tax policy expert, but my understanding is part of a comprehensive review should be looking at, are we taxing individuals versus families, and looking at that question and doing it in a way that doesn't disproportionately have negative impacts on, say, single parents or others who wouldn't be able to access the same kind of tax reduction benefits.
Oui, je crois que ça devrait être possible de le faire.
Yes, I think it would be possible to do so, but what you have to avoid is ambiguity. You don't want it to be overly ambiguous where people could use the system. There'll have to be markers that will be laid down. Perhaps lower taxation for business than for individuals, but there's nothing wrong with it. I don't see anything wrong with it per se. However, there's also the issue that was brought up earlier. The businesses undertake greater risk. The whole notion of timing, the whole notion of opportunity that presents itself. So there may be some way there where you could have some sort of criterion based on a percentage which might be similar to a passive investment, but which would be very closely monitored. But I don't think it would be as it is now, where people use a system to be able to benefit and benefit only. And that's why they incorporate themselves.
That round of questionings, we're at 4 minutes. Ms. O'Connell.
Thank you, Mr. Chair. Mr. Solomon, your statement, you mentioned in your opening remarks and then in that last question, you really went further in terms of saying spouses should be seen as a family unit, and you talked about in your opening statement that sprinkling of income for those that legitimately work in the business and then even those who don't, and I'm assuming you're referring back again to the spouse as that unit. But I have kind of two questions. One is, how could you justify building into a system a benefit for married individuals, leaving out single individuals who would not have that benefit? And two, if you're referring to the idea that a small business owner, for example, works really hard and their spouse might have to take care of the kids or do something in addition to allow that small business owner to do what they do and put in the hours they put in. But then I would draw, because I've heard that argument, and I would draw the comparison to not only a doctor, but a firefighter or a paramedic who may have to get up in the middle of the night for a greater community service, but don't actually have the ability to sprinkle income to, let's say, a family member, a spouse, to be able to do the job and do the things they do in that position. So could you elaborate on how you would justify spouses being a family unit despite the inequality for those couple of examples that I provided?
Well, I guess with respect to your question, as I mentioned in my opening comments, the spouse does contribute to the earnings of the business, whether they're directly or indirectly involved. And that should establish an entitlement to be able to receive income and not pay tax at the very highest rate simply because they're someone's spouse. If someone is an employee, you have to do a comparison, and there's been much debate about this with these proposals, of the other factors involved, and that's why we need to have a more comprehensive review of the system. Although I'm not a lawyer, I do know in the case of family law, a husband and wife are seen to have equal entitlement to the family assets. And while I'm mixing tax law with family law, there is a similar theory in that both spouses are contributing to the economic growth of the family unit.
Thank you. So my next question, Ms. Dutt, again, I'm referring to what was reported in the media as some internal documents on messaging from the Conservative Party, and in it they said, you know, what will Trudeau's taxes mean? And one of the things say, if you need a family doctor, it will be harder to find one as a result of these tax implications. As a doctor and someone from Atlantic Canada, and we've talked about the challenges for the medical profession in terms of that it might be different than in other provinces. For example, in Ontario, we have other challenges in healthcare. But could you speak to whether you actually think that finding a family doctor will be directly correlated to these tax changes, or do you think there are perhaps systematic issues in terms of the medical care across the country that might be leading to some of the access issues?
I guess I see two things. One, it's been kind of painted as a for, against, and doctors divided, but I think in the end I often find with physician colleagues who may adamantly oppose the tax changes, we come to agreement on knowing that there are problems in the system that we need to deal with, and that's often the common place, and we may differ on how to address tax policy, but I fully support my colleagues who do work incredibly hard and work long hours, and I wanted to say that. I think one issue that comes up in this discussion, which isn't going to be solved by tax policies, is the differential in physician earnings between different specialties. So family doctors, emergency physicians, pediatricians are some examples of on the spectrum, lower earning physicians, and they are also often ones who may have higher overhead. So a physician who's running their own one-person family doctor practice, you may be using more of the income that you have to run that practice. So whether we're going to lose physicians, again, I don't know that we have the evidence to say from the past that we will, but I will say that there may be differential impacts on some physicians, especially those who may be using these tax incentives to support their businesses rather than as their own savings.
Thank you. Did Mr. Paquette?
Both Mr. Poilievre.
I'll start with a quick correction. It has been said that small businesses have a lower tax rate on their passive income. In fact, they pay a higher tax rate on their passive income under the present rules. Moving though on to Ms. O'Connell's remarks, that she was commenting on this inequality that she sees in retired business owners sharing their income with their spouses, as though that they are the only ones who are able to do that. We actually have something called pension splitting in this country. For a small business owner, that the income, the dividends they take out of the business they built throughout their lives, that is their pension. For a public servant, we all get a public pension, and we are allowed to split that pension. So, I mean, the Prime Minister will be able to split his government pension with his spouse for the express and sole purpose of lowering his tax burden. Do you think that's fair?
Who wants to answer, Ms.
I'll
Workham?
answer that. I did proactively address that issue in my opening comments. I think that's absolutely not fair, and that should be changed as well.
Raised by the honourable member, is that, I mean, the difference though is that a small business owner or bigger business owner incorporated would be able to compound at an interest rate for a longer time without paying taxes than the retiree who's been a worker, salary worker for all his life. So all the interest payment, the composition of interest rates will give him a higher return.
I'm aware of that, sir.
That's a difference that's important to point out.
I'm aware of that, but what was stated on the panel by one of the witnesses is that passive income is taxed at a lower rate within a private corporation. That, in fact, is not true. It is taxed at a higher rate within a private corporation. So that is the correction that I was making. Anybody else want to comment? I want to state clearly that I support pension splitting. I was part of the government that brought it in, but the government is taking away pension splitting for small business owners. Do you think it's consistent that members of the government bench will be able to split their pensions with their spouses when they're taking away that opportunity from small business owners?
Can I?
Mr. Weisman and then Mr. Solomon.
I think it is fair, given the context that there is pension splitting to employees. I think that income sprinkling is a form of income sharing amongst business owners. So I do think if there's going to be fairness in the system, the two should be allowed.
And just to clarify, under the government's proposal, there is one way that the retired couple could continue to split their income, in fact, would be required to split their income, and that is if they get a divorce, in which case the Divorce Act would require that they divide up their assets and therefore their income. So they will allow it for people who have a company or the Liberals would allow it for people who have a company or a government pension. They will allow it for, require it for divorced couples, but they will ban small business owners from dividing up their effective pension assets for the purposes of minimizing their tax bill.
Mind you, Pierre, this is a proposal. It is not the Liberals are doing anything as yet. There is a proposal that there's consultations on, so let's not forget that. Mr. Solomon, you want to answer?
I just want to make a couple of brief comments on that issue. I have heard some suggest that, well, a business owner could contribute to an RRSP and then they would be able to income split as well, and that is a fair comment. However, in many cases, especially I'm going back to that family that makes $50,000 to $100,000 a year, they're trying to grow their business. They just do not have the excess cash to be able to fund their RRSP, at least in their early years. Many businesses actually refer to their business as their retirement plan. It is their RRSP. So yeah, I just don't think you can look at a pension that's built up over many years and compare it to a business and say that one should be income split and one should not. I think the two are hard to compare, and I don't believe the private sector business owner in many cases has enough time to build a pension that would be equivalent to a defined benefit pension that maybe a public sector employee would be entitled to.
Okay, thank you, Mr. Sabera. We're going to cut back to about, we need 3 questioners, so you're only going to get 3 minutes. Okay. So be snappy. No speeches.
No, thank you, Mr. Chair, and thank you everyone for being here today. Just wanted to go to Mr. Weisman first. I've met with many of your colleagues in the tax industry to go over these proposals and better understand how we can make the system better, how we can improve tax fairness, tax efficiency, and wanted just to ask you, are there issues in the spirit of what we put forward in the consultation paper that may address some of the issues in terms of tax fairness?
Are there issues? I think, yeah, as I said earlier, I think some of the proposals are in line with the government's policy intent and with the platform they ran on. And I think those are workable. I think there's overkill in the proposals the way they are, and they're just unwieldy. And unfortunately, the most dangerous pieces of these proposals are buried, and no one understands them except the tax practitioners, and no one's talking about them.
Coleman, if you can answer the same question, please.
I would agree as well. I believe, there are aspects of the proposals that have merit. I mentioned before that some of the proposed changes Section 84.1, for example, I could support. But in many of these situations, it's fact-specific as to whether each individual proposal is having too much collateral damage to deal with an issue that's trying to be dealt with. The proposals end up capturing things that were not intended, or in my view, they weren't intended.
Thank you. I'm finished, Mr. Chair.
Oh,
well, I'm finished.
Really fast. Mr. Albas. Mr. Albas.
Thank you, Mr. Chair. Again, thank you to all of our witnesses for your testimony here today. Very helpful. Further to Mr. Ferguson's line of questioning before, are there certain advantages and whether or not it's fair? I would just make sure that's on the record, Mr. Chair, that it's very much akin to our highway or public transport system. Some people choose to use a car because it fits their needs. Some people choose a van or trucking, a larger truck. They have different features. And obviously we require trucks to stop over and put on chains in certain areas and to comply with certain documents and compliance because they are a larger use and there should be more checks and balances. So this is not a matter of advantage or whether something is advantageous or not. This is a question of what feature they're operating under. I'd like just to go, first of all, in regards to TOSI. That's the tax on split income. I'm going to talk to Mr. Weissman. Mr. Weissman, these rules are well established. In the government's own document, it just says it's not winning at court enough. And so that's why it's putting on these reasonableness tests. Now, there's no definition of what's reasonable. It's going to end up being where ultimately the court decides what's reasonable given the law. Do you feel that that CRA has the capacity to be able to handle this increased scrutiny of taxed on split income?
Given CRA's resources now, I do not think they will be able to handle this, and we are having difficulty. CRA is having difficulty handling tax matters as they are now. So, and I feel badly for the CRA employees, but there's an influx of audit work going on. Those audits are not resolved satisfactorily because of subjective issues. They go to appeals. The appeals division has a finite number of people to manage the appeals. We're waiting 6 to 9 months to even be assigned to an appeals officer these days.
Okay, so $250 million is what the government thinks it'll get from these new rules. Do you think that they will get that based on the increased cost of seeing more of these things going to court?
In fairness, it's not a question I can absolutely answer. My gut feel would be that it will cost more than it will benefit.
Okay, thank you. And do I have some more time? I'd like to go to Dr. Dutt. Doctor, thanks for your testimony. I've spoken to a number of people in my riding, and first of all, whenever I'm in Karamias, whenever I'm in Coston, whenever I'm in Princeton, whenever I'm in Logan Lake or Merritt, the first thing is doctor recruitment and doctor retention. Now, I've spoken to doctors in the Princeton area, and they've said that these current rules will incentivize them to no longer work in a clinical setting, but instead go to places. One doctor in Summerlin said that they'll stop working in a clinical setting and go to Emerge or work for Medio, which is like a Skype service for medicine. Will that affect the way patients interact with their doctors, and is that good?
Yes, I just wanted to also comment on your analogy, which I thought was interesting because the people who tend to use public transit are often lower income and often unable to.
And often are subsidized. So can we focus on my question because I'm asking you specifically as a doctor?
But I think it's relevant to this issue because it speaks to who can access what types of benefits. So I just wanted to point that out. And to respond to your question, I actually think it's been a good conversation in terms of saying what is the best way to pay physicians. Initially, physicians didn't want to be salaried when Medicare was first created, fought very hard against that. But what seems to be coming out now is that physicians do want to be paid in different types of models because the current way of paying many physicians isn't working. So
I'm not talking about how they're being paid, ma'am. I'm asking, will this have an effect on clinical operations between...
Dan, order. Mr. Paquette wanted to give a quick answer, and you're over time.
No, I would like to actually find out what it will have on clinical experience, Mr. Chair.
Just a quick add in terms of the doctors who have an experience in Quebec, in which we gave... and that didn't increase the number of doctors practicing. We had to take other measures to do that. So in Ontario, so I mean, I don't think the change would decrease the number of doctors or the availability of that. I think the experience of Quebec speaks by itself in that regard.
Your point?
Oh, Mr. Chair, I was simply asking her to see whether or not this will affect how people interact with their physician in a clinical setting.
Okay.
Will there be positive or negative impacts?
Can we have a quick answer in that, Ms. Dutt, and then we're going to Mr. McLeod.
I would say it will affect how physicians are able to engage with our provincial organizations and federal government in terms of creating a better environment both for doctors and for patients.
But on the ground,
okay, now,
clinical.
Dan, we're done. Mr. McLeod.
Thank you, Mr. Chair, and thank to the presenters today. Is a very interesting discussion. Of note, of course, is that we're at consultation stage, no legislation written yet, and of course, we all recognize the tax system is very complex, many pages long, and I've heard many concerns over the last while about how the system needs to be fair, needs to be balanced, and I think we all agree that it needs to allow for growth. It needs to allow for retirement. Some people have raised concerns that the proposed amendments don't go far enough. And I've heard the points that are being made about tax credits that I would think are designed to encourage growth for the company are being viewed as the way to plan for a strategy for a family's retirement. Now, I would think that the mechanisms that are in place at RPPs, RSPs, would be something that would be used like everybody else, but I'm hearing different things on that. Could maybe I ask you to explain how you see that?
Answer. Any volunteers? Mr. Solomon and Mr. Wiesman.
Sure. Well, that's a great question. Certainly, business owners can utilize the RSP system for contributing funds to their RSP for their retirement. However, when you contribute to an RSP, you lose flexibility if one of the goals of holding the money inside a corporation is for future expansion or working capital. It's not easy to just take the money back out of the RSP at that time. So many business owners do make that decision that in lieu of an RSP, they will do what I would call a corporate investment strategy. That's really multi-pronged. Part of it is for business growth and part of it is for retirement. But it's primarily a flexibility issue that it works better in some situations.
Last comment.
I think that the question you've asked oversimplifies things. Yes, money is retained in companies to fund retirement. It's also retained in capital-intensive companies for expansion, for downturns, etc. As I said earlier in my opening comments, there are some types of corporations that don't need to accumulate as much reserve. In professional corporations, for example, which I thought were the target of the government's platform, election platform, and some of my colleagues will not be happy with me saying this, but professional corporations do not need the same kind of capital retention that normal family businesses do, and there are ways to address that much more simply than what's been proposed in, we're told, is a consultation stage, but this is not like a consultation stage I've ever seen in my career.
Thank you very much. That'll end this panel. I want to thank each and every witness for coming forward and answering questions as directly as they can. Also thank the members as well. We will have to suspend as a committee for a couple of minutes. We need to go in camera to deal with a budget for this study, or people that come from afar will be shortchanged. So could we suspend for a couple of minutes? And I thank the witnesses again. Suspended.